Are we Gucci or not? 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 Oh yeah, we are fucking Gucci. My fucking Gucci, baby. Okay, okay. Get a link and let's get fucking going. And let's get fuck. Okay, okay, okay. Okay. The Discord. Get the Discord open. Where is that thingity thing? What should we call this? I don't even know. What should we call this? No name. How about that? It doesn't even matter, right? I'm kind of wasting this shit. Boy! No, I'm gonna waste on this. Boom, 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 boom. In terms of where we got off yesterday, ended up getting the 382 bounce, right? The Valley Area High. Kind of talked about this zone. It was a little suspicious given this, but ended up doing it, right? So I did end up adding to the short, or sorry, the long. Like when we start getting above view up. And then add it again here when we clear the high. So see if we can make it up to these zones or not. Kind of sticking to the plan, right? Kind of talked about all this stuff yesterday. In terms of how this went today, opened in the gap and just ripped out of it, right? Never looked back. So yeah, everything going according to plan, as per usual. As per usual. And right now we're doing a bit of an 886 pixel perfect bounce. Huh? What? Yellow line? What? Huh? Cut to the math. Question is, do we go from here or are we gonna pull back a bit? What is going on? We'll kind of look at some data in a second here and trying to figure out what's a Gucci. And then we will be on our way. I don't think there's much else to catch up on, right? Let's update our levels first, actually. First and foremost. Well, yeah, also, that's what it was. It was Olympic. Mr. Olympic had asked us a question right in the stream. I didn't catch it. What was it? Oh, like if I memorize the levels or write them down. Like both, right? I mean, like I keep, like, for instance, when I like the stuff that I put in the Discord plans, like I leave drawn on here, right? Like all these circles that we've talked about in the Discord, like they're all still here. Plus I see it visually with my eyes and whenever I'm looking at any software for the charts. But typically I do memorize it though, right? Like at the end of the day, I'm looking at this all day, it's just my job. So if I can't memorize like 10 things, oh, what am I good for? Probably not much. Probably not much. Let me just kind of clean this up a bit. Clean this. We'll get rid of this for now. Don't need this thing, anything here no more. And we'll update this. Then we will update our levels. 64648. 64648. 63229. Six 2929. 2303. How's this looking? It'll be interesting to see if we hold this zone, right? Kind of this like a little like region right here. Kind of stay above yesterday's value area high. Hold the point of control, worst case. We'll see, right? Perfectly reasonable to come back down and retest some of this stuff. Kind of look at some of this data, see what's at Gucci. And then what do we do then? I don't know. Wow. Everything. I kind of want to watch that one guy's short video, but I don't know. Like 2 hours long. I can't imagine he's gonna be talking a whole lot about anything particularly worthwhile, but not sure what to think. Six, 5, 6. Okay. Anything else doing? Where'd my chart? Did we close it? We must have closed it, yeah. It's not this, is it? Oh, it is this. Was there anything too particularly interesting going on today, right? Yeah, not much has changed from last time I looked at this. Anyways, I gotta decide where I want to shave some off on the rest of this thing, right? Thing's been running though, goddamn. Imagine we didn't shave at all. If we literally bottom took the entry here, we would be mega juicing on this fucking thing right now. God. Oh god. Damn, that hurts. That hurts. Interesting. This is looking like pretty interesting, right? I think reclaimed all the moving averages at this point, and it's like pretty impulsive too. After the gap down. Interesting. Anyways. What else we got going on here? Okay. Okay, we'll close this thing. What a day. What a day. Man, I went to get a haircut. I swear to God, these people were fucking going off. Off. Talking to me about this shit literally for like an hour. I'm supposed to be there for like 20, 30 minutes. I was there for like hour and a half. I've gotten so tired of people asking me stuff about trading because it's always the same fucking story every time. People ask me about this stuff non-stop, blah, 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 blah. And then they never end up doing anything. There's zero follow through. Every fucking time. Okay, we'll answer these messages and then we'll kind of plow through one of these videos. Let's clear our phones. We're not sitting here with people waiting. Oh, we have alarms. Yeah, oh, yeah, we got plenty of alarms. Okay, okay. Okay. I think we're more or less good to go. Oh, fuck. I gotta plan shit. I gotta plan fucking shit, man. Fuck. Need to plan events. I'm not in the mood. Although, you know what? Man, being able to have ChatGPT and whatnot, like, so helpful. Like, I've noticed, like, obviously I've been using it since it came out. But I find that over time, I've been, like, applying it to more and more use cases that I didn't, like, ever consider at first. And it really is, like, super beneficial for a lot of them. Super beneficial. And I used to hate shopping for clothes. Hate it. And one day I was fucking around with ChatGPT, like looking into that stuff, and it actually made it like very efficient. Very efficient. Okay. Got this thing going. Let's actually put it on stream this time. Also, how's this stuff doing? And we do have an outside day in terms of the volume profile. Interesting. And we are kind of like failing up here. We'll keep that in mind. Leave that up there. How's this looking, by the way? Okay. You know, I'll leave this options data thing open here on the side for now, because that way we'll kind of get a glance at how things are starting to develop in the new month. I'll do it after the video. We'll do it before we do this chart for the next video. If I remember my login info. Okay, cool. Well, yeah, you know what I realized? That they updated the for anyone that's like following the options data, especially for like Bitcoin, knows that like before Deribit was like the biggest platform for options volume, but like IBIT has like surpassed it, and there wasn't any good like places aggregating the IBIT data, but now like Unusual Whales has added all of it, which is nice, which is really nice actually. Very nice. Okay. Also, shout out to Spain. Watching that game at the gym today. Boy. When that shit right at the end. Who do we play next if I need to look at the actual bracket? Bracket. Oh, they haven't done like this. That's so annoying. Boom, boom. France, Morocco. Nice. I'm gonna be in Toronto for all these games. Feels good. Feels good, man. Shout out to the 6. Art Fanatics.
So that's a 30% increase in a day. So that's the optimal scenario. For this specific set.
The fuck?
This trade is.
Make sure we actually put that thing up here this time. Turn that off. Open this. And I said, we'll see. This could be end up being like a huge waste of time. Most of these people like all do the parabolic short almost the same way. Also, I looked more into what that girl had mentioned about the Howard Hughes holdings. Did I actually talk about it at the what's it called? Liquidity, like the all-in event. Like that's like Bill Ackman is behind that. So if you want to go do some more research, good place to start. And we'll pause this.
$30,000 and your account was $100,000. So that's a 30% increase in a day. So that's the optimal scenario. For this specific setup, my win rate is 85%, 90%. I have a high win rate. Like this is the only setup that I have with an extremely high win rate. All the other stuff that I'm long come in 25, 30% win rate. I operate into failure actually because
a world-class trader with over 290% return in a single year in the US investing championships.
Everything is just a probability. There's not a certainty, right? You cannot risk your whole career in any single trade. And even 1% is a stretch. As I said, I'm risking 0.5 myself because I understand the risk and it's a complementary setup for me. I use 3 entry tactics for this kind of setup. But
we are joined by the
interestingly enough, if you actually go look at that competition, was it? I think it was Jason Shapiro that mentioned it. It was pretty interesting actually. Like he monitors how traders are doing on the leaderboards in this competition to kind of get a feel for like how well people are following the market when it's like trending out of nowhere. Because most of these traders on there are all 10 followers that are top of the leaderboard, right? So like the logic that he was applying essentially was that it was like when this move had started around this time. So like in theory, right, if this move was going to be ending soon, then you would expect to be seeing a shit ton of people like on the leaderboard with like high P&L returns right now. Like they've been in the move and shaving, but there wasn't. It's interesting. And there's also like more application than just that, right? It's just like one insight from that data set. But there's like tons of insight to be gained. That'd be something I gave some thought to. Various different aspects. You know what I'm saying? Nerding out. Boy, if you guys don't know the fucking Nerdo, I swear. I swear. One day, if I get into Market Wizards one day, boy, I'm gonna go off. I'm gonna start snapping. Snapping.
One and only Marios Stamatoulis.
You guys
In this
do not know
episode, he
half of
reveals
that.
his go-to short trading setup with exact criteria and steps to follow in order to create the highest probability scenario.
This has fake outs, but it's frequent. This has good accuracy, but it's rare. So what do? How can we have a better frequency, but also increase our accuracy? What's the secret sauce here? People should pay attention to this because
Know exactly when not to trade and when to put your foot on the gas. This is a true masterclass into elite trading at its best, owned on Chart Fanatics.
from a single trade, one time per year, you can achieve 10, 15, 20% gains. What's the average benchmark here? I think that a performance of 80%, 100% is really good, okay? And you can achieve that only by
Welcome everyone back to Chart Fanatics, the go-to channel for all of the very best strategy and concept breakdowns with some of the very best traders in the world. Talking which today, we're in an amazing studio with an amazing guest. He made 291% in the US investing championships in a single year. He's been trading for coming into his 10th year now, which is absolutely phenomenal. He is someone with a professional mindset, a real love and passion for the chart. And today we're going to go over his parabolic short setup. It's the one and only Marios Stamatoulis.
Thanks for having me, Reese.
It's my absolute pleasure.
It's great being here.
My absolute pleasure. Thank you for being here. I know you made the travel over. I know we're close neighbors, but still, I appreciate you coming over and amazing stuff that you put out to the community. I've been following you for a long time, and
Where's
I
he
wanted
from?
to invite you on. I just didn't know where you were in the world and how we were going to make it happen, but here we are. And as I said, we're going to go through your parabolic short setup today. And you mentioned just before we started, this is the setup that can do 3, 4, 5% in a single day at times, and it's very specific. We're going to take our time today to go through it A to Z. Where should we start? What's like laying the foundation to begin this?
Yeah, so first of all, I would like to, to lay the context of what I do, right? So I'm basically, a momentum trader, right? So I'm mainly long, so I'm trying, to capture, not by the bottom, right, and some stuff, but, first I want to see an acceleration in price, maybe an elevated volume and some, relative strength of that asset over, the indices. That just to get me interested, right? And then, you overlay all these bonus factors and information. And I am to capitalize, on the move that comes after that, right? So, many great moves take time, take many weeks, take many months to unfold. So I'm aiming to capitalize on that, right? So my style is kind of, I have a lot of blends and influences from other styles. So just to give you an example, I do kind of social arbitrage in my methodology. So evaluating the story and narratives, in stocks and either amplifying factors, elevating the presence, of a stock at its regime, right? Like something like Chris Camilo does, right?
Yes, I was
But
about to say, yeah.
Exactly, in a more simpler way, right? So I have elements of a growth trader, so I evaluate fundamentals, the quality of them. The
No,
progression of them.
that Chris Camilo guy, I swear, they have one of the most interesting podcasts. Like the stuff I have to talk about there is just so it's unique. It's unique, right? He's the only people I ever hear talking about the trade that DFC has, and they're always like quite interesting. And a lot of times they play out pretty well. Yeah. That community, by the way, that Discord, like the Dumb Money Live, highly suggest, right? Because there's all it's not just like him, right? The people in the community are like helping out, and they find like the most interesting things that you just wouldn't expect. Like they were talking about this sweet green stuff before it popped off, all because of like the social media shit about it behind it. Which is like whatever, that's obvious, right? Like the idea of like social arbitrage is like that's what he's known for. But there are other ideas that he doesn't get from social media, just from like him talking to people that he knows. And they just like give him some like random alpha and he talks about it on the stream. And also those are like shit you've never heard of either. Super interesting. Super interesting.
Elements, let's say, of an analyst guy, honestly. So evaluating the progression of news, right? The quality of them, if there's something game-changing, eliminating the noise out of it. So I also employ techniques from, I started as a day trader. I don't know if you know that, right? So I still buy my positions as a day trader, the same weight of stop. I just let them unfold, right? Just to hit that asymmetry. So yeah, my style is kind of like an MMA kind of trading,
Yes,
right?
yes.
It's momentum core, but I have a lot of sprinkles of other methods just to reinforce, that foundation more. So just to get, over what I do as setups and then really go deep into the parabolic short, right? So mainly I use 3 setups. I use breakouts, right? I use catalyst gaps and it's parabolic shorts. Of course, there are many branches and nuances, in each of them. So let me kind of draw them out.
Of course, yeah.
So the first thing that I do is the classic breakouts, right? So I wait for the price to accelerate, as we say, right? And then kind of get into a range. It doesn't need to be a perfect triangle like these. There are thousands of variations into that stuff, right? So, my aim is to buy, this kind of breakout as the candle goes, the price escapes that range to capitalize on the next leg up, right? And then you can have something like this, and then like next leg up. Of course, you can overlay, some moving averages.
Okay, whatever.
You know,
Typical shit everyone uses.
Coming along as surfing the price. So that's the classic breakout. So that's one thing that I do, right? The other thing is the catalyst gaps. You may know it as episodic pivots, right?
Yes.
So most of the times you have a stock that, let's do a line chart, right?
Okay.
That's been doing maybe nothing, or it can be neglected or beaten down, or not doing something significant for a big period of time. It cannot it can be an uptrend as well, right? But then you have some game-changing news most of the time that create a gap, right? So you aim to capitalize on the continuation after that gap, right? And this is a phenomenon that has been explained, right? Post earnings announcement with. It doesn't always have to be earnings. It can be a stock specific, some news that are stock specific, like a partnership agreement, something that materially changes the company itself. But this phenomenon really changes the character of that stock, right? It can be always aim to buy on the first day, but also sometimes it can be a delayed reaction, right? So you can have a candle, then a progression. So it kind of becomes, let's overlay a moving average, right? Let's say the 10. That's coming from down here, right? So sometimes you get a hybrid of that setup with a catalyst gap as a delayed reaction, right? And then you're going to take the breakout and continue on the move, right? And these are the long setups.
Hey guys, before we get into this incredible
Is
episode,
hype going or what? Nice. Thing about hype, I don't know what I'm thinking about right now is like this thing might like break out for real. Turn this shit off. This thing's definitely setting up for like another leg higher on the higher time frame, right? That I was considering taking like shaving up here on the long, but I might just leave some of it or like shave less. And I might even add, to be honest. Like this thing is definitely setting up like how are the moving averages on this thing how would they be looking? Yeah, literally, right? It's like surfing this shit, tightening up as like volume's declining. Interesting, very interesting. We'll put an alarm on the high and then we'll come back and look at this. Boom, boom. Imagine we get up here tonight, right? That'd be kind of nice. Get our next TP hit tonight before we get off. That would be kind of nice. We'll see though. It's kind of a ways away still.
Say a massive thank you for all of your support. Seeing Indexix.com, the link's in the description. Put your email in, and every there this offer more that's gonna.
Now, the parabolic short setup, right, is
Yeah, these people all trade the same thing. Like, when you really sit down, like I've watched enough of these people now to know like all they do. They're almost all doing the same handful of things. Like episodic pivots, like the wedge pops, the breakdowns, the consolidation, like the parabolic short this guy's talking about. The earnings, like high volume close. And then, like undercut and rallies essentially. Plus like retest of the moving averages. More or less all doing the same shit.
You get, you might have a stock that's been going up. It doesn't need to go up because, we will go deep into, all the formats and all the categories of stocks that this phenomenon can happen, right? But at some point you get a really rapid acceleration, in a really short amount of time, big, percentage change.
Yes.
So what I'm aiming to do is capitalize on the true exhaustion day, all right? On the day that, can go down after, this phenomenon of a climax stop. So in terms of time frame, and I'm going to explain why I want to focus on that setup today, right? So the other two setups, the breakouts and the catalyst gaps, are kind of focused on long term, right? Capturing positions for many months or many weeks, it depends, right? As you expand your time frame, the puzzle becomes a bit harder, right? So yes, price action always dominates, right? Or it's a primary filter, of course, but there are many forces, that become important, the longer the time frame is. So yes, you might have, you might want to do a breakout to follow a breakout setup or a catalyst setup, but you need to understand, the forces behind the stock, and there are many, right? The stories and narratives of that stock. If it belongs, let's say the sub-industry mechanics, does it belong to a theme? Is that theme strong? Is it dominant, right? What is the Fed regime? Or what is the market doing right now? the progression and the quality of its news, right? So, and many other things, the quality of the fundamentals, like the business quality, the team, they deliver. So you see, there are a lot of forces, and you need to weigh them accordingly.
Yeah.
Because these are equally important to the price when we're talking about long term. Because if you do the breakouts or the catalyst gaps in random stocks, the results are not going to be great, right? So you need that context.
Yeah,
and,
but like,
you know,
as you saying this, one thing I could think is like, okay, I get what he's saying. Like, yeah, you do want to be aware of what's going on and whatnot. But at the end of the day, higher market cap things are not just going to be having some random parabolic blow off top short setup, right? Like usually the things that have actual like momentum and narrative behind them already. So you don't have to be that aware, but it does help. It does help. Especially when we're talking about the other trade setups, not necessarily the blow off top short.
Of course, 2 hours are not gonna, cut it. We need a lot of, hours to go deep into that stuff and all the nuances and stuff. But the parabolic shorts, right? Since it's more of a day trade, right, or a short-term swing trade, price always dominates in that space, right? So you can be agnostic about the other forces that are in play and just.
Oh yeah, okay, fair enough, right? Fair enough, he agrees.
And I think we can go over all the
fair enough
details around the setup and
definitely, definitely. Just to recap what you said and how we started as well. Yeah. I love that analogy with MMA, right? Because it's great to, of course, have a very specific niche, for example, in terms of one particular skill set like boxing. You're taking that same analogy, boxing being great with your hands. But in trading, that MMA analogy is so true because you might be great at entries, but if you don't know how to exit, just as a prime example, or you might be great with price action, but if you don't understand fundamentals, exactly. Even if you don't understand fundamentals to an elite level or a really high level, having an understanding, especially when it comes to these kind of, maybe not this particular setup as you just said, but just generally speaking, is still going to be beneficial, especially when you're talking a bit more longer term as that time horizon increases. But no, it's great because obviously the audience primarily, as I imagine, are more day trading, are probably wanting to be more active. And so for us to go over this today, no doubt is going to be incredible. And I remember we're going to see examples later on. But one of the examples you mentioned was silver recently, right? So we're going to look into that a bit later on, which is going to be great. But I'm so interested, especially as you mentioned, I was quite interested in terms of how this will set up. To know it's more price action based is actually very interesting to me, and I'm excited for it. Where do you think we should begin next then when diving into the parabolic short?
Yeah, so I think we should rephrase what it is, right? Yeah. And maybe we can mention the behavioral reason that this phenomenon exists, because I think that's important as well, right? For all the setups that I do, or I think that's a great advice actually for everyone. For every part of your foundation, no matter what you do, it's really important to understand the why behind you're doing something. Especially on setups, you need to have that longevity on your setups, right? You need to have setups that you have seen that have been working out for hundreds of years, possibly, right? And it's either a structural tendency of the market or a behavioral tendency of the market. So just to give you an example, why breakouts work? Why are breakouts there in 100 years plus? Because it's the natural law of supply and demand. That's how it materializes, right? That's the structure of the market. You get stair steps, all right? Stocks move, they perform a leg up, then they consolidate in different ways, right? And then a new leg up. It's a structural tendency of the market. Why does catalyst gaps? Why is catalyst gaps, evident through many years? What do you think? Because it's based on a surprise, and surprise is a behavioral tendency in the market, right? You get a stock maybe, at $30, and it might be undervalued, overvalued actually, the previous day, and then some game-changing news hits, right? It can be explosive earnings with a surprise and increased guidance. So what does it do, right? So it prompts institutions and analysts, all right, to run the gender models, right, and reevaluate the stock. And so the same stock could be, that it was overvalued at 30, could be undervalued at 50, and that creates competition, and that's why you get this character change in that
exactly.
stock.
And then to your point, we're recording this January 12th, just for everyone at home, because we don't know when this will be released, but January 12th is when we're recording this, and a prime example is over the last, well, especially this month, but just last few months, you've seen like Intel, for example, with the US investing into that company. No one would have, unless you're insider, Baron Trump, as they say, might have known and positioned himself, but for the most part,
that's not true. That's not true.
Won't know that news.
That's not true at all. There are people positioning in that way ahead, even like a year before that. People I know in banking in Canada that were talking about this like way before that. In general too, if you like follow any podcast, like this whole chip thing is not no secret.
Is announced, and that's going to create a parabolic and that volatility spike for that individual stock, for example. Then also, as you mentioned, the theme, right? What that stock is included in is going to have that impact too. AMD, that announcement that took place as well more recently. Like, to your point, these are fundamental things that, regardless of time frame or how long you've been trading, they're always going to take place. If anything, now, what would your thoughts be? Would you say now, actually, more than ever, you're going to see them because of the nature of how fast and speed is in regards to these fundamentals, how fast it gets to, well, I guess as retail traders or traders in general, the speed of that news is actually only increased, meaning that impact is probably even faster within the market.
Yeah, exactly. And I've noticed that, if you go and study the stock market, in the past, let's say 3 years compared to 10 or 20 years, the footprints are really more evident. Like the price structure, the level of volume that is elevated, right? The aggressiveness and the change of character in certain spots in price is way more evident now than before. And that's a good thing for traders because we need that footprint to know what's brewing inside the stock, right? And then do our research and increase that outlier chance within our spectrum, our portfolio, right? but getting into the parabolic short graph.
Exactly, I was gonna say,
So as I said, this you can be agnostic of all the forces. It's price always dominates there. So again, you get a stock, right, that really, really, accelerates in a short amount of time. All right. So let's discuss, as I said, the behavioral reason, because we didn't mention it, right? So if you go back in history, you're going to see these climax tops happening again, over and over again. And reflexivity, as Soros described it, is a reason for it. Like as more and more people, have the same narrative, right, or the same views about the stocks and act on it, right, they reinforce the trend. And the more and more people pile up, right, the trend changes in terms of volatility and the slope, right, and you get at some point that everyone is crowded until some realization kicks in, right? Exactly, right? So some realization kicks in. So that's the behavioral reason that this happens, and it takes only a spark actually, to make this happen.
Yeah.
Like if you remember back in 2025. Or it was December 2024, I might be mistaken, NVIDIA CEO, went on when already the quantum names were, in climax stops phases, right? And said quantum computing is 15 years, away, right?
Yeah.
So, everything tanked, right? It was that spark that recalibrated everything.
One comment is all it takes.
Yeah, and that's why it's an important setup. People want to explain the reasons as well, right? Because people, can understand, right? If they're long, right? If you're long, you can know how to, manage your positions better, or sell more efficiently.
So would you say almost your setups can coincide or almost kind of overlap or start to go from your long setups to this setup?
Yeah, exactly. Like all the setups that you use create a storyline, right? It's exactly what you say, because you might, start and move because of a game-changing catalyst.
Yeah.
That's the catalyst gap. You might start the position there or get a delayed reaction. Then if that catalyst is strong and more news come, or the company itself, has a nice composition and maybe it's amplified by the environment, then you're gonna get multiple breakouts.
Yeah.
And then if that continues and you get a great momentum leader or a great momentum move, or a hype in there in terms of story, you can get these climax stops.
Yeah.
So it's a full storyline. That's you nailed it there. So
Yeah.
if you're already long in that kind of setup, right, you can sell more efficiently, because after this, after all the criteria are met, and you have this exhaustion day, like stocks can pull back 30, 40, 50% in a day, right? So it's a really nice way that I use to sell more aggressively, into strength. I usually in my system rely on this randomness of the market,
Gotcha.
right? So I mostly trail the moving averages because I want to let the market do whatever it wants to do, right? And have this outlier effect. Because if you sell massively into strength, you never have outliers.
Yeah.
But the only time that I sell aggressively into strength is when the criteria for this setup emerge.
Understood. Yeah.
Right? So one thing is, if you're already long, you're a swing trader, a position trader, and you see something like this and the criteria being fulfilled.
Me hearing that statement paired with the fact that his placement, like when the video started, what did they say? Guy gets like 280% return in the year. Probably because of what he just said. As in, like, he's fucking himself over. He basically just said he doesn't take profit, right? And he waits for it to pull back into the moving averages. There's more efficient ways to do that. Because there are people that have way higher returns than this in the same competition. And they're doing what I'm talking about, where they're like shaving into like statistical extensions. And then if it pulls back into the moving average, then you cut the remaining of the position. And suppose there's like the scenario C where like the thing is moving up and then it starts to pull back, but it's not like a full-on pullback. It just ends up consolidating. So like you took profit like coming into the zone, then it like consolidates. And then you can just add back on the next breakout. So yeah.
Right, and they're really simple criteria, but effective. You can sell more aggressively and manage your positions better, right? And the other way is you can actually short, these moves here, okay, to capture this 1 day or 2 day, certain swing, a big move down, right? Capture a big move down.
Futures traders, it's time to hear about Apex Trade. And no firm, you have two options. I mentioned this, so you one of our
The first, after starting to discuss actually, is the categories of stock that this setup emerges, right?
Yeah.
So after studying the history, like we can put everything under 3 categories, right? So, and this will serve as a context for later on. Okay.
perfect. Yeah.
So the first category, let's name it categories of stocks. All right. So the first category that this setup, materializes in is the momentum leaders. So you can have, a stock that has been in an uptrend for long, right? It changes in that slope, and at some point it really, goes parabolic in a 90% degree. But that can last, for maybe many months, right?
Okay,
or maybe 1 year plus. All right.
Of course.
So these are the momentum leaders that you actually, through many months, you see the slope kind of changing. It's in a long uptrend, stage 2, like many momentum traders call it, right? And then you get a climax stop. Okay. So this we can call the market leaders. Okay, this is the first category. We know stocks, around that, like MSTR,
Yeah.
right, MicroStrategy or SMCI. or UA MY recently, with rare earths. All these were, market leaders that went into this climax stop. And usually it's really powerful if you're a position trader or a swing trader and you use this kind of setup. After, the criteria are met, right, and they're really evident in this type of stocks, sometimes it signals the end of the whole uptrend move.
Yeah.
All right, and then stocks can go into stage 3 and stage 4. It happened with SMCI or MSTR or other stocks, right? And in some other cases, even if they don't, die right away, right? It's usually the juice of the move is out, right?
Yeah.
So you don't want to mess again with them because you really want the fastest assets out there, right? So that's an important thing to understand in this kind of category. The second category is let's say we call it thematic stocks or energy bursts, random energy bursts. Okay, it can happen randomly. So you can have a stock that has been doing nothing, right? Or being in an uptrend. It can be stocks that belong in quantum computing names, right? AI data center names, robotics, whatever thing is out there, right? And then you can have an accelerated move, as we draw it above, right? And then an exhaustion, okay? And the third category is IPOs. Like this phenomenon is really evident in IPOs, right? You will have a stock, in an IPO, and then it accelerates really massively, and then maybe you get an exhaustion day. So why I'm mentioning all this because this will serve as a context later on to understand the expectancy of the move of the exhaustion day.
Got you. Okay. So based on these three criterias or categories of stocks, it will then change the expectancy of what you would expect from that short.
Exactly. Right.
Understood, yeah.
So let's.
When it comes to these three categories, before we move on, are these things that you will scan for and have scanners dedicated to these specific elements, or these things that just kind of are on your radar and you're slowly sort of piecing together? Because as you said, this one in particular is more longer term.
Yeah, exactly.
So that one is something you probably research and can look for. But in terms of these two here, do you have scanners in place to look for these things?
Yeah, that's a nice question. So every day I go through 1,000 stocks, right? So I naturally see them, but of course I have scans mostly to find these random bursts, right?
Yeah.
Because on thematics I'm going to be looking at them. For IPOs I'm looking at them. Market leaders I'm already looking at them
course,
months, or even most of the times I'm already long, the market leaders and the thematic stocks, right?
Yeah.
But for some energy bursts for sure I have some scans, to find these kind of moves. But that's a nice question, for the rarity, right? Like this is the most rare out of them, okay? Because every year you don't get a ton of market leaders, and not all market leaders go into climatic tops, right? So this is the more rare.
So we say that most of the market leaders, they might not have this move. They'll probably end up ranging tiny little pullbacks and ranging. Versus this, what we're looking for here is sort of that catalyst. Because with market leaders, they'll have those moves, but they might not go into sort of that parabolic, that really overcrowded.
Exactly.
So what's the last one that we even had like that? Like what, SanDisk maybe? And even then, it wasn't even like that crazy. Like if you compare this to this thing, anything. There's some pretty aggressive gap ups at the end. For the SanDisk though?
For sure, yeah, exactly. So for sure, at least the market leader is going to do that, right? You had Plug back in 2021, and every year you have market leaders doing that. But as you said, like a lot of them don't do it. They just die off, really painfully and slowly.
Yeah, exactly.
So I mean the trend of it, right? So this is the most rare, and this is the most frequent. Okay.
Okay, got you.
And this is also frequent, but it depends, on how many IPOs launch, every year. Like in 2021, we had a ton of them, right?
Yeah.
It depends on the year, but it is frequent as well. Okay. So these are the categories. As I said, these, we keep it as a context for later on in terms of the expectancy of the move. So let's, start with the filters that I use, for this parabolic short. So in terms of the criteria, right, the selection criteria, I use two types of criteria, right? The first one has to do with the percentage change, in the prior move before the exhaustion day, okay? And the second filter that I have, the second criteria, is more about the structure of the price, okay, itself, how it expresses itself. So let's start with the first, filter. First filter. We're going to call it.
Curious how you decide to do this.
Right. So
because like this is where everyone starts to differ a bit in their application of these strategies, right? Like yes, most people have a parabolic short in mind as a trade setup they can be taking if it ever happens to appear. But everyone goes about it a little differently.
Correlation with market cap, okay? Because that's important. Why do I have this filter, right? Because if a stock has a market cap, let's say of I don't know, 100 million, right? And you have a stock of, a mega cap with 300 billion, right? Do you expect the same kind of moves, right? No, right? So we need to correlate kind of the percentage move that happens before, with the market cap, right? So after, studying the past, I have ended up, with this kind of filter. So, for companies that have, let's say, less than 10 billion market cap, all right? The minimum move that I want before I get even interested in, in any parabolic move, right, is at least, all right, 200% plus prior move.
Okay.
Okay, like these stocks usually move between 200% to 1,000% or even more, all right? But the minimum I require just to get interested is 200%.
Got you.
And something important here for everyone, I don't track this move, from the start of whatever, the price action is. I track it from the last evident base, okay, of the stock. And that might be even the 20 moving average at sometimes, okay? This is really important. You track this percentage increase from the last base, okay? Do you have a question, Reese?
No, I was just going to say, is that because you're trying to capture that sentiment, that volatility, that overcrowded feeling, and get that emotion in? Because you might have 200%, but that was like, really far ago. It's already kind of bumped and based and bumped and based. And then if you measure the whole move, it's 200%, but really there's none of that emotions involved, really.
Yeah,
But
exactly.
if you do it from the last base, even if it's already moved, say 200% before that, that 200 from the base, is time an element? Is there, you want that in a quick succession of time?
First, the answer to this is actually studying the past, right? Like, so all the filters that I use, all the numbers that I use, even though I don't like to use, if we go over my long setups, there's not many one-dimensional filters, right? What is one-dimensional filter? 200%, an exact number, right?
Okay, yeah.
But studying that, and this is a setup that I use, for over 9, 10.
Mm. Interesting way to go about it. I'm not sure if I'm a fan of that though. Like that can be kind of almost arbitrary in some sense.
10 years. I've studied a lot. So that's true what you said. And also, it's adding up the commonalities of the percentage in stocks that belong to in this category, right? How much was the increase before the event, the event happened, the exhaustion day happened, right? So you stack all this up and you end up, with a number. So just to revert back, and this is something important here. The 200% plus is the minimum, all right? Some stocks can, go up 600%, 700%. As you go closer, 2 times the minimum threshold, let's say, or 3 times, this move is considered extreme. So if you have something with under 10 billion market cap and you have a move, right, that is, let's say 800% or 1,000%, I consider that in my mind as extreme, okay? And this will serve again later on, okay, when we start adding things up,
of course,
to understand more, how much we expect from the exhaustion day, right? So I can write like 2 times or 3 times the minimum threshold. That move is extreme, okay? And we keep that in the back of our minds.
Yeah.
Now, for something that is, let's say, 10 billion to 100 billion, okay, the minimum, let's say, percentage move that I want is 100%.
Okay.
Okay.
Yeah. Do you know, just before we move on, is there a minimum that you wouldn't touch in terms of market cap? So in terms of if it was below a certain threshold, you wouldn't really factor.
Yeah, that's a nice question. Listen, personally, I don't, because what I do like to see as another threshold or another filter, it's the volume underlying, these days, right?
Okay,
What's the average dollar volume every day? So if it's enough, for my specific liquidity, that's, okay for me to go, into an asset that even, has a 150 million market cap.
Gotcha.
If it's moving, 500 million in a day, it's not, I'm not easily going to get trapped, okay? Of course, this, things, the parabolics, right? Or either long or parabolic shorts, are really risky kind of setups if you don't approach them, with elegance, right? But you only need to care about what's the dollar volume moving, underlying, and a lot of stuff that have really low market caps, provide the best of the moves, right?
Gotcha, yeah.
So getting back to the second, let's say, category in terms of market cap, if something has between 10 billion to 100 billion, then the minimum move I require just to get interested, all right? And I log this, from where the move started. Okay, so what was the market cap when I'm starting to see the move?
Okay,
okay,
yeah.
right. So again, 2 times or 3 times plus this threshold.
Yeah.
Okay, that can be considered extreme.
Got you.
And then we get into perfect. We get into the larger caps, right? So if we have something with, let's say, market cap, right, over 100 billion market cap.
Yeah.
Then the minimum I require is 50%. Okay, it makes sense.
That makes sense. Yeah. So the more the market cap increases, the lower we need in terms of the percentage move, but it's all in correlation and sort of reflects that market cap, because the likelihood of say 100 billion plus company doing 600% is going to be much smaller.
Exactly.
Possible, in these markets in particular with any craziness, but very, very, you probably will not see that very often or if ever. But that's why. So the parabolic movement. The one question that comes to mind though, off the back of this, is frequency. Would you say the frequency, my thinking just looking at this right now, would say the frequency is maybe higher here than here, or is it not a factor?
Yeah, I think the frequency between these two, are way more elevated than this one.
Got you.
For sure. But listen, we're not going to stop there. I think this is where most people, stop and then add some simple bonus factors. That's nothing for me, okay?
Really?
Because as I said, this is a one-dimensional filter, all right? And you can put the market into a box, honestly. Things, they don't appear the same way, exactly the same way each time. They kind of synchronize, right? So if you put a really one-dimensional filter and stop there, right, you exclude a lot of opportunities excluded. So that's why I said the second filter is more broad, and it's about how the price structure actually expresses itself, okay? And that's what we're going to talk about, right? Without the second filter, I'm not even touching. I don't care what is happening, before.
Really?
The stock can move, 1,000%. If it doesn't show me the structure that I want to trade, I'm not touching it, okay?
So even with this filter, without the second filter,
no
trade.
That's why we have these two filters, all right? It's about the second filter.
Like what, gaps or something?
Price structure. Okay, and this is really important.
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor in the CFD prop firm.
Like I mean, first thing that comes to mind is like consecutive candles, the size of the candles relative to one another, the volume. Are they starting to like gap more and more, etc.? Or even something like the slope of like a low time frame moving average is like just gone fucking parabolic, just pointing straight up basically.
Firm space, the one, the only, the best, only from a no rules necessary.
We'll see.
Only prop firm in the industry, Alpha
We will
Capital,
see.
which, by the way, the offer's on screen. Link.
Stocks. I kind of boiled down all of them into three main categories, okay? And I gave them kind of names. So all the parabolic phenomena will mostly express themselves in three structural ways, okay? And it's really simple, right? The first, I call it the ants, right? Let's call it ants. So you got a lot of, imagine this is green, right? A lot of green days, one after the other, but they're, really small with, really small ranges, okay? Again, I'm talking about of all the ways that the parabolic phenomenon expresses itself, right? So that's one way. Now, if something like that happens, again, to rephrase, a lot of days consecutively, okay, but really, really small days. If that happens, and let's put a small X here because I need to say something more, okay? If that happens, even if the minimum threshold, let's say, is already there, let's say that's the minimum threshold we had from here.
Perfect.
All right? I'm not going to touch it. I need something more, okay? The second way that the parabolic phenomenon expresses itself is what I call green red, okay? So let's use the red market here.
Perfect.
So you can have, green days that get interrupted, let's say, by some red days.
Okay.
Right? This is in terms of frequency. These two are the most frequent. This is the most frequent, but you get combos as well. Okay. So you get some down days, and then the phenomenon continues. All right. So this is the green red. So let's say even if the minimum threshold is here, okay, I'm not going to touch it again. I need something more, and there's a behavioral reason of why I'm not touching it, and it's easy to find. Right? These are simple stuff. Okay. So I'll put a small X here. The third expression, and as I said, you can get the combos, right? Something can start as a green red and then continue as ants, right? Or you can start as ants and then continue as green red.
Got you.
But the true one that I'm truly interested in is a textbook, right? And what's a textbook? You get really big days, really big green days. It might have gaps as well. Okay, really evident with massive ranges. Okay. This is where I get interested. Let's say this is the minimum threshold. I need at least two. I never short on the first day. I need at least two. Most of the times it's between 2 and 4. Really big, massive days with really, big ATR, all right, range. So that's the only thing that I'm interested in. Now, here's the question, right? And I think people should pay attention to this because, they see the move, they see something like this and they go short and they get trapped for many days. I've seen, the parabolic catching the tops generally is a hard thing to do, right? Like people are getting called market wizards for that stuff.
Yeah, that would.
Whenever I post on Twitter, right? Like, how did you know that? It's first grade stuff. It's just candles and structure. It's really easy, but you need to have some nice filters, and you don't want to get trapped because being trapped on a short.
It's the same thing on all time frames, really, right? It's like, are you trying to short as the price is like coming up in like a controlled manner? Or are you trying to short when price is like just fucking in the middle of some like random hella hyper move and it's extended? The same thing as I'm looking for the setup he's talking about on the daily. Whoever may be.
Have a gap up on top of that and
of course,
can be destroyed, right? So something important that I can mention later, but it's good to phrase it here, is for this specific setup, you need to be extremely strict with your criteria, respect them, all right? And always have a time window, okay? I will explain what the time window is a bit later. So let's get back here. So a lot of people, as I said, start, to shorting and get trapped into these moves. This is the one that I'm interested in, right? But in terms of rarity, and here's the problem, okay? This has fake outs.
Okay.
But it's frequent.
Okay.
Okay? Again, this has fake outs, but it's frequent. This has good accuracy, right? But it's rare.
Got you.
So what do? How can we, have a better frequency, okay? But also increase our accuracy? What's the secret sauce here? It's really easy. I think you can think of it. It's extremely easy. It's so funny that it's so easy, all right? And we can go over the examples, and you will be amazed of how this kind of small tip, which is extremely easy, helps things out. So is there a way to, because I don't, I can't rely only on the textbook, right? You can't rely on the outliers only. I mean, the textbook setups, okay, they're rare. You need some frequency. So what do? So I'll reveal it, all right?
Yeah, I was getting heart palpitations and I think I was getting tested.
No, it's really, it's so dumb, honestly, but it's really effective. So, let's say you have something like this, all right? I'm just going to redraw it.
Yeah, of course, yeah.
Okay. So let's say you start with something like an AND, okay? And as I said, I don't want to do anything on that. Before we reveal it, okay? Why do you think I'm not interested in this and this? There's a behavioral reason, right? So as I said, you need to understand the why behind the move, right? So this whole phenomenon is based on the release of pressure, the massive release of pressure, right? For the stock to move down massively in the day. That's what you want to capture. So see these days, right? Who's behind some moves? Of course, there are retails, institutions, different blends of this. But here, the action, right, can be masked. Okay. So institutions, let's say, have many days to adjust, to sell, to mask their behavior, right?
Yeah.
And it doesn't show in the price action.
Okay.
Again, here, right, you get a few days up, then you have a small release of pressure. You have time, to adjust. Here, no one has time to adjust.
Yep.
Everyone is dragged into these amplified emotions, right? No one has time to really adjust. Everyone is being trapped, right? And then you have the massive, release of pressure when it happens, right? So that's why behavioral, I don't want this.
Gotcha.
Okay? So what do? We want to increase our, our frequency and also our accuracy. So let's say this is the minimum threshold as a first filter. We need that first filter, okay? Even if you have this alone, I don't care, right? You need both of the filters.
Yeah.
Okay. I'm only interested in hybrid setups. Okay. So you wait for elements of the textbook, all right?
Okay.
To be revealed on these two that are really frequent in order to get interested. So imagine having something like this and then boom into this.
Okay.
All right. It's really, I told you, it's really simple, all right? Or imagine having something like that, okay? Right? The green, red, and then you get, two massive days. So you wait for elements of the textbook to be materialized.
Is it still on the same sort of time frame, or to do that, would you then adjust time frame?
No, it's everything is based on the daily time frame, right? So you wait for the daily candles, and see the structure there. So even if it is done, this is my simple workaround to really have, increased frequency and increased accuracy.
You still need the minimum 2 days.
No, here you can wait, maybe for 1 day of bigger.
Either way, you're looking for this at the end, right? To like, what did Big Jess imply? Basically, like if you're looking at these, wait till you see these symptoms on these charts. Like either way, you're just looking for this. What happens previously is kind of irrelevant. But
okay.
2 days is even better. Like I want, most of the times. That's why.
Maybe I'm misunderstanding what he meant by that.
Or when it's developing, I give a time window of 2 days. I say today or tomorrow, right?
Gotcha.
Tomorrow, the day after tomorrow. This is the time window that I give because sometimes you have 1 day, you want some extra confirmation. For other stuff, there are more bonus factors that we will discuss, right? But this is my little hack to actually get it right? So if we open one example, all right, before we reveal some bonus factors as well, you will see how this helps with moves that happened in the past, right? So let's jump into one example before we add some bonus factors if it's okay.
Sure, yeah, why not? We're doing something slightly different today. We're going to continue on the whiteboard shortly, but we're going to show this example now and see how this develops and how this filter actually looks, and then we'll come back to the whiteboard. So we're going to go on the screen and see an example of this now.
Perfect. So one of the examples that I want to show you real quick and everyone is SMCI, right? Which everyone was following back, in 2024, early 2024. So you got this, kind of breakout after, a big range. This is where I actually, went long myself, right? So notice the price action before this, right? So in terms of the categories that we were talking about, where does this kind of fit in? You have a move that's been, in an uptrend for so long, changing slopes.
Yeah.
So it's the market leader category that we discussed, right?
Exactly, yeah.
Now, let's start adding the first filter, right? So what was, and again, I said that we track the acceleration from the last base, right? So the right way to track it is from around this zone. Am I correct?
Yeah.
Okay. So you don't have to be extremely accurate on that stuff, right? Just notice where the base is and start, noticing the acceleration. Now, the first filter we have is the price acceleration relative to the market cap, right?
Exactly.
So SMCI, Supermicrocomputer back then, and this was a market leader. Everyone started to know this company, right? So I was long myself there. But in terms of market cap, this belonged, and I can reveal it to you just to make it easier, in this kind of category, right?
Okay.
That between the 10 to 100 billion market cap.
Okay.
So what's the minimum requirement that we have on a move around this is 100%, right? So I'm not looking to do anything if we have 50%, 60%, 70%, 80%. I don't.
It has to hit that.
It has to hit that minimum threshold just to get me interested into seeing, something might happen. And remember, I was already long, right?
Exactly.
On
Yeah.
that stuff. So let's zoom in a bit, actually. So let's start, this is, the price action that we're tracking, right?
Yep.
So let's start, from the last base, which is this mini base, right? As we said, the minimum move is around 100%, right?
That's right.
Have we got that? If you see the small column on the left side, you see that is 70%. So, are we interested yet? No, the minimum threshold is not yet passed. And in terms of the structure, where this belongs to, in terms of
I would say green to red at that point.
exactly,
Yeah.
right? It's a green to red. So first, we try to evaluate the first filter, right? So let's first hit that 100% mark, okay?
Yeah.
And this is where we hit it. Like this is the minimum threshold here, okay? Around here.
Got you.
And still we're in this green red, right? So if this green red continues without do you see any, let's say, let me zoom in a bit more. Do you see any crazy big candle, expansion, gap ups? Do you see something crazy, or is it kind of the same? Of course you have many candles. This was the breakout candle here,
Yeah.
right? But do you see anything that is really different in terms of character as a structure in the
Not
price?
massively, just that one
Exactly, no?
larger green candle, but we hadn't even hit the 100% yet, right?
Yeah, this is where we hit the threshold. So again, if we don't get elements of the textbook, as
You
we
know,
were discussing,
curious how he
into
goes
that.
about his entry. 'Cause the thing about this is like, if you're actually watching these candles on open and like looking at the low time frame chart, you can be like fishing for the short as this move's starting to happen, right? Like if you think it's going to be cracking pretty soon, that's when you start to like, look at it, right? And like the thing is, you don't know when it's going to crack. Like yes, you can have all these filters on and blah blah blah, but at the end of the day, the best way to know is by actually looking what's happening that day. So
the green red or the ants. I'm not interested, even if we're above the threshold. So let's continue, and I will let you tell me when you see it. All right.
Okay.
So many people were trying to short here. It's
I can
extended,
imagine,
and this cycle was continuing. So
the thing about this, like the thing most people don't realize about this kind of shit, that either A, criticize taking these shorts. Actually, mostly those people, right? It's like a lot of times you just get break even, right? If you're like actually being methodical with your entry, you just out break even. Like it's fine to take your shots when they present themselves, but like yeah, if you're going against the trend, obviously immediately manage risk. You don't want to like get blown over and actually lose money trying to short this shit.
is that something big? No.
Starting, I would say.
Yeah,
But
that's
nothing.
not yet. Now it turns into ants, right?
Yeah,
Turns into ants.
exactly.
But it takes time to see things, to really see it. But again, we don't have anything crazy yet.
Yeah.
But now you get a gap up, right? And
Exactly,
a gap up is, you can consider this as, a candle up until here, right? Because
Exactly,
there's price action in the gap. And we're now. Do you see
Now
an
we see.
extension?
Yeah, now we see.
Okay. So if you see up until here, let's say we had green to red and some ants, right? Do we now have elements of the textbook?
Oh yeah.
Into
That was the interesting thing. So when I said I was starting to see it, it's because, and this is like great, no doubt, because other people might fall the same, and that's probably where they go wrong because they're jumping in and trying to jump the gun. But just because of like, okay, we gapped, but
Yeah.
okay, we gapped, but what was the?
That's good.
Was there pressure, as you mentioned earlier? Like, where's the pressure? Is the pressure starting to get overloaded, overcrowded? No, right? We gapped a little bit, but the candle.
That's good. That's one candle, that expresses somewhat the textbook characteristics.
Yeah.
We need one more just to be more sure, right? So here, again, we're talking about probabilities. Nothing is a certainty, all right? All that we do as traders is play around with probabilities. But here, everything is fulfilled, all right? In terms of these two filters, and we will add more bonuses, okay? Because there are more bonuses in that specific one. Other stuff, MSTR, and other stuff. So if you were looking at this and you can say, okay, I have the first filter and the second filter fulfilled. Can I take advantage of the next day as a short? Okay. What do you think? Would you be wrong? Would you be right? Would you want one more day? And also, if you were long already, sorry for interrupting.
You have to see it. That's an unfair question to ask. You don't know, right? At this point, you're definitely watching it on when it opens to decide. Who the fuck knows beforehand? Especially because it's reaching $100 right now, right? Like usually these kind of things blow through those kind of levels.
Is fulfilled here. Would selling something?
But we'll see. We'll see.
This day. Maybe you can wait for the next day. All right, for the intraday characteristics that we can discuss for that setup. You can sell more effectively. Look what happened. Okay, boom.
Yeah.
Okay, and let's look at another example again. Really, quickly.
Got up to like what? What would this have been? At 108. This is what I mean, though, right? I'm sure people are the one on this on the open. So as long as we were watching it.
With something that happened more recently, okay? And the examples are endless. Like we can sit here all day and do that stuff, right? Now, look at something like this, okay? Again, you have a long-term uptrend that lasts for over a year.
Yep.
The slope changes, right? And then you get something. You can go and sorry, these are my notes, from other stuff. But look, that's interesting. Do you see that here that I say maybe this is the last move?
Yeah.
I just saw it, okay? So because I was expecting like stocks, we can mention it here, like stocks that are in stage 2 and are leaders, or momentum leaders, they usually last in that stage 2 for, the best of them 2 to 2.5 years.
Yeah.
Some more average, 1.5 to 2. Okay. So, if you go into this price action and this trend, I was expecting probably in this time that maybe I should capture this last move because it might be the last of the uptrend, right?
Understood. Yeah.
Yeah. So,
so in this case, when you're talking about the base,
yeah,
would it be? What would you class it when we had that pullback and those consolidation?
That small base here.
Gotcha.
You can start writing it from that small base.
Understood.
Okay.
Yeah.
Most of the time, if you want to be more accurate, right, you can track the 20 moving average, as I said. Okay.
Okay.
So but in terms of structure, okay, because I don't want to overdo it here. In terms of structure only. Now, do we see elements?
At that point, I would say yes.
Yeah, right. Elements of the,
Which filter for this one, what would it be in terms of our market cap to percentage?
for sure. So the market cap was really low, right? So what do we need is at least a 200% move, okay? The most effective way you can track the prior percentage move, okay, as I said, is from the last big base. That's what, I do more time. So the 20 moving average, serves, as a good proxy, okay? Now, so you can start tracking it from here, let's say, okay? And up until here, we're close, okay? If you track it from the 20 moving average, which is this yellow line, we're already in that threshold, right?
Okay, understood.
Okay. So myself at this point, right, and this was, a more liquid name, right? I would say, okay, one more would make it better, right? But I'm saying, okay, these criteria are getting fulfilled.
That's how most people do it, right? Like even this like indicator. It's just another way to track from the moving average for like actually like quantifiable. As opposed to like just some random point in price we're broke out of. The thing about this is there's so many ways to like calculate this. This is just like one of many ways to compute like a similar metric.
Right? If we track it from here, it's already full. One more day would be awesome as well, right? It doesn't mean that it can work the next day. Okay, you just add bonuses, all right? And you see, where did it get up, okay? Like, if we track it from here, probably the minimum threshold is already in. So you see that? Even from here or here. And then, because this was a long-term uptrend, this actually was a stop of the uptrend. So imagine being long here, all right? This would be a really nice sell just because this criteria will fulfilled.
So even in one case, even if you're not going to short, let's say you don't want to take the risk of shorting, especially because you're trying to short essentially the top using the setup, the very criteria alone allows you to manage your long positions with a lot more accuracy.
Exactly, and that's why I wanted to showcase, my kind of criteria. That's the don't short it, okay? Shorting is more painful. You can be trapped, okay? You can make a lot of money, of course, okay? Because it's a really powerful setup. You can make 5, 6, 10% in a day, okay? And we can actually do some market replays later on to actually do one, trade together from the past. But if you don't want to short, all right, and don't carry that risk or that stress, if you're long, all right, just use it to manage your positions more effectively. That's why I think it's important. And forget about long-term momentum moves. Let's say something as a thing, right? As we discussed, another category is the thematic stuff, right? Okay. So quantum compute, I was in these moves, right, on quantum when they happened, the previous year, right, back in December 2024. This was a really strong thing. It started with IONQ, right, and then you had Rigetti and Qubit and all that stuff being accelerated. These are the things that we're talking about, right? But at some point, right, you see something like this. Okay, so I was in that stock, right? And what's this move here? Is it we said we track
some girthy bars right there.
Exactly, it's the text, the minimum threshold, because this was it was in the category of less than 10 billion, right?
Okay, got you.
But the minimum threshold is here. It's already passed, and this is the perfect technique. Okay, so what do you think? Can we sell? You can sell some portion on this day, but more effectively you can wait on the next day on the criteria that you actually short intraday to sell. Okay, would it be wise? Probably. Okay, so you see it again and again. And as I said, it doesn't mean that it will land the move, okay? Because again, I traded quantum names later in 2025 again, okay? But it can stall a move for a long period of time. So look what happened. And then it's when NVIDIA CEO, when I said, quantum computing so far away, and then you had the gap downs. So you see this, like the market is so beautiful, right? Everything is connected. Certain news, certain events come at certain points. It was when we had this climax top, that this happened, right? And it had an effect. Like if the same announcement came here, probably wouldn't have the same effect.
Of course, yeah.
So we can go back, discuss some bonuses, and then get back into some examples to start adding bonuses.
Let's do it,
and then go into the intraday action, all right?
Amazing. Yeah, sounds perfect.
Yeah, so now let's add some bonus factors that increase the chances of this happening, right? So imagine you have the first filter passed, right? Then the minimum threshold, and then you have the structure looking the way you want it, either the textbook or the hybrids that we have here, right? Now let's add some bonus factors that increases the chances. Again, nothing is a certainty. Don't take, you can imagine how many times everything is fulfilled and then something fails. You need no ego on that stuff, all right? It's, yes, elevated probabilities, for sure. I have a high win rate. Like this is the only setup that I have with an extremely high win rate. All the other stuff that I'm long, I'm in 25, 30% win rate. I operate into failure, actually. Right. But since this is, because my system is based on asymmetry, right? Extreme reward to risk at the expense of win rate, okay?
Gotcha.
But for this specific setup, my win rate is 85%, 90%. But again, it's more rare. Like you get 10 extremely good opportunities every year, then 10 more mediocre. But again, you capture 3%, 5, 6%, 8%, every time. So, it compounds, right? Only from one setup, right, in your toolkit. So getting to the bonus factors, the first bonus factor is actually the volume, all right?
Understood.
So and you might have heard this, from other guests probably that
that MSCI really example had a
the highest volume over 1 year or over 1 year. This is really important because it really marks down, okay, the crowded behavior. Okay, you get the extremely big volume earlier in momentum moves. That's really good because institutions are piling in.
Okay, yeah.
But when you're in climatic tops and you get really big volume, that actually it's the reverse. It's extremely crowded behavior, and just you need a spark for everything to unfold. And usually retail traders are the last to join the party. That's the bad. Okay, so Imagine you have something like a hybrid as we discussed, okay? I'm just going to take the ants here.
Yep.
Okay. And then you have, as we said, extreme big handles. So you get the textbook characteristics into the ants. All right. Now, below, I'm going to do some volume handles. Right. So imagine the volume is like that for the days, right? And then you get something like this. Okay. And this might be the highest volume over 1 year. Okay. So this is a really, really big bonus factor for me. When I see that, everything, all the chances increase. Okay, and we can go back into examples to see that unfolding, right? Because it really is a footprint of quality behavior. It's an extra thing that I want to see. Okay, this is the first bonus. All right, so let's discuss the second bonus, which again, everything is easy, nothing is hard here. Okay, the second bonus is whole numbers. Okay, or psychological numbers.
Understood,
This is
yeah.
really effective as well. So you might have let's say a stock trading at $230, right? The first time is going to hit the 300. This is a psychological level, right? And 500 is an even bigger one.
Of course,
okay?
yeah.
So psychological levels play a big role. It depends on where the stock trades at. Like something that trades, $5.3, 10 is a nice number,
Of course,
right?
yeah.
Something that trades, 850, the 1,000 is the number, right? So, let's say you have again the ants, just to make it uniform, okay? Now imagine you have a stock trading at $250, and this is, let's say, 250. That's, sorry, let's say 243, right?
Yep.
Versus having something, VS, let's say, something that this is the first time it reaches the $500 mark. Okay, this is a psychological level. Okay, and you have to understand, like most of market participants, right, are investors, right, or they're funds. Like the psychological levels exist, right? That's why whole numbers. No one, if you enter the stock at $3.5, you're not going to sell at 22.38. Okay, you're going to sell at maybe as it approaches 30, as it approaches 40, right? So there is evidence in these psychological numbers. So let's start adding these bonus factors again on SMCI that we did before, right? To see if.
But yeah, but I would also like give it a lot of merit from like an algorithm, right? If you're trying to like dispense of some set of shares at the full price, with the whole number.
If everything gets fulfilled again, and if we have any of these bonus factors that would, tell to you that, man, maybe this is the day, right? So let's jump right back in. Now let's continue. We agreed before that, this looks nice, and this day looks even nicer because we have the textbook elements into the, the green, red, and ants later on, okay? And also, right, we're way above the minimum threshold. We're actually getting into the extreme zone, if you see, because we're we're close to 2 times, not extremely, not the extreme of extremes, but more elevated, right? And as I said, this will serve later on. But what do we see on the dollar volume underlying here? Is that
the highest
volume ever?
Yeah.
And if I go back into probably years, okay, you will see that this is the highest dollar volume ever, right?
Yep.
For at least the recent years. Now that's one thing, and it's not only the dollar volume; it's the actual volume as well, because dollar volume is volume multiplied by the price itself. Okay, so it makes sense to be increased, but it's the volume itself as well. Okay, meaning the shares that are being traded. What else do we have? This had a stock split, right? So this was priced at around 10 times more in the past.
Oh,
right?
okay.
But even if we don't treat it like that, exactly where, or close to where everything is fulfilled, we get the structure that we want, we get the threshold that we want, we get the bonus volume factor. Do we have anything else in terms of
$100?
Yeah, the first time that it reaches a psychological level, a big psychological level. Okay, so the chances of something like this working out are really elevated. Okay, and that again, just to see, this is what happened. Okay, and just to educate a bit more, this was a long-term move that lasted for more than 1.5 years, right? And this was the end of the juice of the move, as I said. It's not worth messing around. Yes, it went a bit up, and look at what happened afterwards. Nothing, and like that. This actual parabolic move was the end of the momentum in that space, right? So you see how effective it is for everyone, like to incorporate these elements into their approach. Someone can stop looking at the stock after it, solves this. Okay,
There's like 2 important elements. Like one, the importance of having these filters, not just the bare minimum of we've had a parabolic move, and therefore as soon as we look for the first signs of selling pressure, we sell. The importance of these filters allows you to get more accurate, more confident, and essentially have a hopefully higher, that's where the higher win rate no doubt comes in as well. But equally, to your point, it helps everyone. So even if you're not a short trader or you're not interested in trying to short, that long trader, it allows you to start identifying, because the similar approach, right, when we short the top, it's risky, but it's also hard to know when to exit the top, because again, there's nothing to go off on the left.
Exactly.
But in this case, when you start having these filters just on a long perspective in terms of management, it helps everyone. It allows you to have more confidence. It allows you to confidently start to scale out, and feel good about doing so because you've had these filters in place. But the second element I was going to say was in regards to people who rush, right? People who allow again, it kind of goes, the whole element of this is allowing that pressure to take place. But that pressure could also get to a lot of traders where they start to jump in early, mismanage, jump in late even. But that's why having the criteria, the bonus criteria, every element of what we've gone over so far allows you to have that calmness, that clarity, rules to follow, to execute. And don't get me wrong, we're all human. So even if we have rules, no doubt we try to break them here and there. We let the emotion get to us. But the whole point of this process, so anyone watching, no doubt.
I don't know. I feel like Like, is it just me? Okay, to initially get these charts on your mind, if you're not already watching them, then sure, a scanning has a lot of merit in that regard. But like, I don't know. In my opinion, once these are on your radar of like things I need to be watching, and you're looking for the crack, it's better than like following through with the rest of the filter. Because any one of these days could be the short. It's this thing. Any one of these days could be the short. And as long as you're watching it each day to know on the open or like however the day's developing to try and catch it, it's gonna be your best bet to catch this candle if it ends up printing this way.
It's easy to think, as you said, easy and simple rules to follow, but you have to follow the rules. You're not going
Here's
to
a CP doesn't need like kind of executions. Entry tactics are coming up next. Nice. Okay.
unless you are able to take these rules on board and actually follow them. Make sure the boxes are ticked before you start to, as we start to move into the sort of intraday and how we're entering, etc. Because even there's going to be rules, no doubt,
Sure, yeah.
and filters that we have to follow. But again, you have to be able to follow them consistently and actually, take those steps. And I know that sounds simple and sounds obvious as well, but I just want to really highlight that because, you've no doubt had to put in a lot of work in order to get to this point where you've identified these filters and rules. And it's easy for people to think, oh, let me copy and paste that. This seems simple and easy, but that discipline and that patience to follow and wait for the criteria is what gets you paid at the end of the day, right?
Exactly. This is, a really important topic, Ruiz. And, as I said, in this specific setup, we can talk, later on of why maybe I transition from day trader into swing trader.
Of course,
maybe
yeah.
it's not the chart fanatics topic here, but we can go deep, in a different time. I wasn't following so much my rules. Okay, so I tried to find a system that hedges against my bad qualities, let's say. But for this specific, that is a more day trading, thing to do. All right, certain setup, precision is important, accuracy is important. Okay, so
True.
waiting for the criteria to be fulfilled, being strict about them, and having the time window. If you go on all over my posts that I mentioned on Twitter, okay, during this phenomenon, before the exhaustion day, okay, and I can send them to you, right? All of the data say maybe today I'm interested today or tomorrow or the day after tomorrow. I always give this 2-day time window, because I don't want to get obsessed over something. Okay, this is really can impact your ego because you want to be right. It's a setup that has high win rate, so you're used to being right.
Yeah.
But the one time that you're not going to be obsessed about this.
Okay,
So
yeah.
I give a 2-day window. Yes, everything should be fulfilled. If it doesn't work out, then I write it off. Next teacher, I don't even watch it again.
Perfect.
And I've been 10 years into the game, and I kind of know how to channel my emotions. But even I use this kind of criteria to say, okay, I write it off 2 days. That's it.
Of course.
All right. So it's really important to follow things to the T regarding that setup. Okay. For other things, you can be loose.
Yeah.
For all the setups that I discussed, the breakout setups, the catalyst gaps, I can be wrong 15, 20 times in a row because it's one trade that can give me back 30, 40, 50 hours.
Yeah.
Right. There's so much wrongdoing, so much mistakes. I can, not be precise, not be accurate, be drunk and trade. Honestly, all right, and be cool with it. That's something that's why I developed, into more.
It is somewhat true in a sense. Like after doing a bit of this more myself, like. Whenever one of these trades end up running that you're swinging, the RR on it is so massive that it's like, well, you're getting like 30, 40, 50 R on the trade if it ends up going. It's just because like your entry ends up being like a low time frame entry, but it ends up playing out like you're playing a big high time frame move, and you're willing to get stopped out multiple times to catch that low. Basically. Oh, there's a dot on here. Delete that shit. Bing.
Allow this thing, okay? And I love day trading as well, okay? That's why I kept so many parts. But for this, you need to be accurate.
Of course.
And just to do one more example, just to not stick only to SMCR.
Okay,
yeah, just let's do MSTR that a lot of people were tracking, just to see that this is universal, okay? And as I said, the examples are countless, okay? So let's go into MSTR. Actually, I kind of revealed, that's my bad, all right? So,
that's okay, no problem.
Again, we have a move that has been going for long again, all right?
Yep.
Do you see the slope changing? Okay, and then we start getting into, what's the last touch out of the 20 around here, right?
Yeah.
Okay. So up until here, what's the minimum threshold we have? I need to remember the market cap. I think it was between 10 to, when the move started happening, between 10 to 100. So we're still
in the middle.
Yeah, we're still within that 100% minimal requirement. Okay, so you will see that we don't have it yet. Like even we track it from the last base here, right? It's not that we have the minimum required yet. It's still on 80%. So even if we have green red, and still these slopes seems to accelerate, we're not there yet. We're not even in the first filtering yet.
Okay.
And we just have the green red. So let's continue a bit. All right. Now we have another base. Okay. Now do we see elements, let's say, of the elements of the textbook into the the green red that we have? Some, right?
Some, yeah.
So yes, there's increased chances of this working out here, but we have a new base, okay? So we can track things from here as well,
Exactly.
okay?
So we have that starting to see pressure, but we don't have that 100% yet from that base.
Exactly, right? So yes, you can say, things can unfold here, but you can be more patient, around these levels, right? So now again, from this base, we're starting, and we updated the market cap. Now we're in a different category because
Oh, really?
yeah. So
Because it moved.
yes, the minimum here is less now. It's 50%, okay?
Okay.
So what else do we see around these levels? Is it yet perfect looking? Not yet. Okay, we have accelerated move that's happening, right? We have a better ranges candles. We have big volume. That's good, all right? So when I was in this because I was long on this, all right?
Got you.
When I was here, I said, give me one more day just to be more sure. Give me something else, all right? I don't want to close that so early, all right? So then I had this, okay? So I gap up, and what else do we have? If you zoom in,
We tapped the 500.
we tap the 500, and the volume is really massive again.
Okay.
And we have 3 days in a row that this is the textbook as well.
Exactly, yeah.
Okay, and there are big range, and the slope is 90% degree angles.
Do you know this? These red days that happened after the original base that we looked at? Would you class that as another base on there?
Do you mean this?
Yeah.
No, because as I said, the good proxy
we
you can use is
started
a
to see.
20 moving average as well, right?
Yeah,
This is the 20, so I can start looking from the last base out of this, right?
Yeah, gotcha.
I was gonna say, I thought they were gonna talk about like how he does the intraday thing. That's all I'm really curious about at this point. Like everything else, kind of just straightforward, right?
And we are in the extreme.
Basically, it's the same thing everyone else is doing.
Market cap, okay, like we had the 50, now it's 120 from this base, so we get into the extremes.
Yeah.
So that's the next thing that we want to discuss, the expectancy of outcomes. But if you're here, okay, just not get ahead.
This will be
Can you say,
interesting.
maybe I can sell something in the strength, all right?
Yeah.
I may not sell everything because I still want to respect randomness. Or if you were a trader, you can say, I'm really paying attention to this to maybe take advantage of the next day.
Yeah.
The next day or the day after tomorrow. After that, if it doesn't happen, I just write it off.
Yeah.
Or just give me again the same everything again from scratch.
Yeah.
All right? Boom. All right? So you see, it's so dumb criteria, so simple stuff, but it's really effective. And what happened? Again, this was a move. This was 2024, late. You had a move that was, going for long. So what do we say? The last timing of the move, if this happens from crowd behavior, this can mark maybe, the
end of that.
the end of the momentum, right? It doesn't mean that it can end the uptrend,
Okay,
but
yeah.
it can end the juice.
Mhm.
So let's see what happened in MSTR after this. Okay, do you see any great leg up that came after? I mean, really big, crazy. Look at this here. The price accelerated from 115 to 500.
Exactly, yeah.
You never see that, and then
And this is long periods of time as well, right? This is essentially a year.
Yeah.
We don't see that all-time high or any sort of momentum
then-
or volatility, and the volume as well.
So that was a stage 3 as momentum traders hold them, and this was a stage 4, right?
Yeah.
So this marked the end of the whole move. So you see again how this is helpful,
Mhm.
okay? To learn this criteria, to monitor stuff. It's not only to take profit from, but it's also to learn philosophically market structure.
Yeah.
It's to take advantage of selling. It's also shorting, okay? And going back to SMCI and then review a bit more things. There are so many ways to take advantage of this phenomenon, all right? Like I don't know, some people might use options, right? This phenomenon emerged on Friday. So this was the day that options were expiring on Friday.
Exactly, yeah.
Okay, so I remember, someone when I mentioned it before, because I mentioned it like SMCI is looking. I was long, remember? SMCI looking parabolic. I might shift gears, the next day. This day here, okay. And I remember seeing people post the out of the money options that this day that were up, 24,000%. So that means for this specific, it doesn't happen always, right?
Of
But
course,
this
yeah.
happened on Friday. That means if you risked, let's say, $1,000 on an out of the money option, but still within the expectancy that we will discuss, okay? Let's say the 90.
But the second element I was going to say was in regards to people who rush, right? People who allow again, it kind of goes, the whole element of this is allowing that pressure to take place. But that pressure could also get to a lot of traders where they start to jump in early, mismanage, jump in late even. But that's why having the criteria, the bonus criteria, every element of what we've gone over so far allows you to have that calmness, that clarity, rules to follow, to execute. And don't get me wrong, we're all human. So even if we have rules, no doubt we try to break them here and there. We let the emotion get to us. But the whole point of this process, so anyone watching, no doubt, it's easy to think, as you said, easy and simple rules to follow. But you have to follow the rules. You're not going to generate the result unless you are able to take these rules on board and actually follow them. Make sure the boxes are ticked before you as we start to move into the sort of intraday and how we're entering, etc. Because even there's going to be rules, no doubt,
True, yeah.
and filters that we have to follow. But again, you have to be able to follow them consistently and actually, take those steps. And I know that sounds simple and sounds obvious as well, but I just want to really highlight that because, you've no doubt had to put in a lot of work in order to get to this point where you've identified these filters and rules. And it's easy for people to think, oh, let me copy and paste that. This seems simple and easy, but that discipline and that patience to follow and wait for the criteria is what gets you paid at the end of the day, right?
Exactly. This is, a really important topic, Ruiz. And, as I said, in this specific setup, we can talk, later on of why maybe a transition from day trader into swing trader.
Of course,
maybe
yeah.
it's not the chart fanatics topic here, but we can go deep, in a different time.
I
was
moved it
important
by
to
accident.
can start
Oops.
looking from the last base out of this, right?
Yeah.
This day or the day after tomorrow. After that, if it doesn't happen, I just write it off.
Yeah.
Or just give me again the same everything again from scratch.
Yeah.
All right. Boom. All right. So you see, it's so dumb criteria, so simple stuff, but it's really effective. And what happened? Again, this was a move. This was 2024. Late. You had a move that was going for long. So what do we say? The last timing of the move, if this happens from crowd behavior, this can mark maybe the
end of that.
the end of the momentum, right? It doesn't mean that it can end the uptrend,
Or
okay,
tide,
but
yeah.
it can end the juice.
Mhm.
So let's see what happened in MSTR after this. Okay, do you see any great leg up that came after. I mean, really big,
Yeah.
you know, also was a small for short. The CI is looking, I was long, remember? I remember seeing people post the, you know, the out of the money options that, you know, this day that were up, you know, 24,000%. So that means for this specific, it doesn't happen always, right? But this happened on Friday. That means if you risked, let's say, $1,000 on an out of the money option, but still within the expectancy that we will discuss, okay? Let's say the 90, right? That went 240 times. $1,000, you make $240,000 in a single day from just this phenomenon. So so many ways to play around with that stuff. Again, this is an outlier that happened on Friday, but you know, you can.
They're the things as traders, you know, options or not, they're the opportunities you have to identify, right? That's our job. They're outliers, but that's our job. Our job really is to hunt for them. And they, as you mentioned, they may not happen frequently, but they're the things that can really adjust your trajectory as a trader. Right?
Exactly.
They're the things, especially for undercapitalized traders, they're the things you need to find, right? Because obviously there's no sense of rushing in trading, ideally. There's no sense of rushing or trying to make money aggressively. But at the end of the day, that's why you're in this game, to try and make money and to scale, right, over your career. And especially when you're undercapitalized and not new, but relatively early in your journey, they're the exact positions, they're the exact moves where everything overlaps. So like that Friday element with the options no doubt helped for this move to take place in its aggressiveness. And whether you trade the option or not, they're
all the dynamics emerging, right, and overlapping one after the other. And
this is why I like to highlight, and you can really sense it from your explanation and breakdown of everything today, but this is why I always try and highlight, you have to have a passion for the markets, regardless of the type of trader you are, day trader, swing trader, stocks, options, futures, it doesn't matter. It all boils down to having that real passion. And what I reflect passion as is understanding those elements. Like a lot of traders who might be new, who all lack that passion, they'll just be looking at this chart, trying to understand where do I find a trade? Or, you know, just looking at price action, for example, like very one-dimensional, very just surface level is what I call it. Those who really exemplify and grow as traders and really hit much higher levels and really essentially achieve the goal that most traders are looking for are the ones who are going into the depths and understanding the different layers and nuances, as you mentioned, like just the options.
How can people not do that, right? That's my question. How can you not do that? Like, there's so much to think about. This game, I swear, I find it so shocking how crazy this game is. Like, I spent a lot of time playing different games and trying to like master them, and like even if I didn't like literally master it like best in the world, I got pretty good. And I also felt like the pinnacle of learning left in it was not that much. But this feels like there's still so much to learn. It's been so long, like years at this point.
Passion for the markets.
There's so much going on in this game for how simple it is. It's insane.
Elements here that are at play that will affect this chart, stock, ticker, whatever it may be that you're trading. But you can really sense that just from the explanation and breakdown we've seen today, that you really have that passion and it's understandable as to why you get the results that you do.
I even breathe for markets, man. And you know, thank you for saying that. You know, we all start for money, right?
Exactly.
Like everyone starts for money, but at some point you need to develop that crazy obsession over the markets. And it might be, you know, different kind of obsession. Someone might be obsessed with deep analysis and you know, understanding.
I didn't do it for money at all. I did the shit because I was fucking had an injury. I had to heal in bed. Nothing to do. I'm like, oh, this looks interesting. What's this? Then I realized it's a fucking game.
That's why you need to find what suits you as well. But
so fun.
Get far without obsession. But if I had to say one thing here is you have to find ways to keep that high level of obsession and studying the past and, you know, refining your skills with living life as well. Okay? Because, you know, I really regret some, you know, years of my life that I wouldn't be here actually.
True. That's exactly how I feel right now. After being home for these past few months, and like still trading fine, but like doing way more shit. Feels so much better.
Older as a person and as a trader, you know, you need to keep that high level of obsession but living life as well.
Exactly. Okay? Yeah, I couldn't agree more.
So getting back into the whiteboard, right? The last thing that we need to discuss is the expectancy of the move, right? So in contrast to longs, in this specific move, I have, you know, an expectancy, right? As I said, on the longs, and I visualize what can happen, but I let the market do its thing. I let randomness do its thing.
Yeah.
Since, you know, and on short it makes sense, right? Something can go down max 100%, right?
Yeah.
Let's say bankruptcy. But on longs, it can go up infinitely. So on short, it makes sense, and based on historical observations, and just for the safety, as we discussed, for the risk of that setup,
of course,
being trapped in, to have some sort of expectancy. Because how expectancy helps is, you know, let's say everything is perfect, right? As I said, that not everything is perfect in the markets, right? But let's say the criteria are there, right?
Yep.
You might have a gap down the day that you actually want to short the setup. So if it gaps down, you know, big, and it already covers the expectancy, should you go in? No, because most of the move is already captured. Or another thing to think about the expectancy is the width of your stop. So let's say you want to short that stop, right? And your expectancy is, let's say, a 20% drop, but your stop, let's say percentage-wise on that day is 10%. It's only a 2-to-1, you know, trade. Yeah. So would you risk being trapped or, you know, have all these risks just for a 2-to-1 trade? No, you want this 5-to-1, 6-to-1, 7-to-1, 8-to-1, 10-to-1 if you can, even from a single day. Okay, you need that asymmetry element even here that is compressed. That's why we introduce the expectancy of outcomes. All right. So Now we need to merge everything we learned, okay? Expectancy of the move, actually, sorry.
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, Trade Profit. No matter what into the Trade Zeller.
Back in history, we have the market leaders.
Yep.
We have the thematic or random bursts in stocks,
IPOs,
right? And the IPOs. Now, by going back in history, I saw that, generally the category, the stocks that belong into the category of the market leaders tend to drop on that exhaustion day around 10 to 8 to 20%, okay? So market leaders, and again, on the true exhaustion day, that's important, okay? On the true exhaustion day, as we discussed here,
Yep.
okay? Tend to drop between 10% to 20%, okay? On average. And we'll add some things here, okay? The themes and random bursts, stocks, bursts, tend to drop, between 20 to 40%, okay? On average. And IPOs, and this can, I'm only talking about the true exhaustion day or max 1 to 2 days. This can unfold and,
go beyond, yes, yeah. So you're looking at that one specific day.
Yeah, but on this specific setup, I'm not interested to hold it for long, right? I'm not interested to stay long, short, 2 weeks. Yeah, I just want this massive release of pressure in 1 to 2 days. That's it.
That's it, yeah.
Okay, so on IPOs, these tend to drop between 20 to 40% again. 20 to 30% for IPOs on average. Now, as we discussed before, we said something about extremes, right?
Yeah.
So when you have a move that is way beyond the threshold, hitting 2 times, 3 times, that is getting into the extreme. So what the extreme does, and is pushing the higher end of the limit.
Okay, understood.
And if it's too extreme, well, it's plus here a bit more. Okay, some deviation. So if you expect 10 to 20 and you have, a really extreme move,
Could get
then
25,
you can get 20, but a deviation from here, not 35.
Yeah.
Like you can say, these are rule of thumbs, right? Like you can say 23, 24%, okay? And the lower the market cap is as well, slightly more expectancy as well,
Understood,
okay?
yeah.
And the same goes here. You have a big prior move in the threshold, maybe this goes into the higher end, and if it's also, small
Slightly,
market cap and extreme move, maybe 45 to 50, okay? And the same here. So this can extend a bit more based on the extremeness of the prior move, as well as, the market cap of the company, okay? So just to go back into these 2 examples, okay, to understand the expectancy again. So getting back to SMCI that we discussed, right? We have everything again to, recap everything, right? All the filters in there, the volume, the psychological number, everything is there. So next day is probable for a short, right? But this is more than the threshold, approaching 2 times the threshold, right?
Yep.
So you can say, okay, like maybe it's closer to 20% as an expectancy. Doesn't mean that it's going to be direct. Again, this is rule of thumb. It's how much can I expect, okay? So you can say, yes, I can expect around 20%, all right? And you drop around this percentage, slightly more of that number, okay?
Yeah.
And then, for the true exhaustion day, this is the true exhaustion day, right? Of course, it can move a bit.
So 20% in terms of expectancy, what that means, just to make it clear, is we've hit, I think, $105, right, roughly?
Yeah.
So 20% meaning, in this case, if it's 105, it'll be like $11 drop.
Exactly. So
20%, sorry, would be like $22.
Yeah.
Sorry, don't want to judge me for my math.
so exactly, from $7.
I was gonna say,
you
what
see
the
the
fuck?
volume on the left, right?
Yeah.
We go down. This move was around 23 to 24%. Okay.
A single day as well.
So if you capture this around here,
Yep.
all right, that will be perfect. And for the options, guys, all right, that maybe this phenomenon happens on Thursday or Friday and want to take advantage of 1 DTE options or 0 DTE. If you can find some out of the money options, right, that are within the expectancy, not outside of it.
Okay.
So you can still have the chances, right? And if they're really cheap, you can take advantage of this phenomenon as well, as it happened here. Okay. So we can you can review many examples yourselves, right? There are a lot of examples around this phenomenon, okay? And go and track this expectancy around the prior move, the structure, the market cap, and see that it usually fits the.
Yeah. And we have more trade examples later anyway. Once we've gone through the intraday actual entry element, we have more examples that we're going to go through also. But yeah, no, that shows it, highlights it perfectly as well.
So most of the times, as a higher level picture, you will see either the stock going up a bit and then finding some form of weakness, then approaching VWAP and then losing VWAP and then, okay, so, or it loses VWAP right away, but I'll do, something that is, more common. So you can have a stock, and let's imagine this is 1 minute time frame, okay, that many people use. You can use the 5, okay, just, it will be more compressed.
Yeah.
So at some point, the stock, might perform its first lower lows, lower highs, okay.
Which time frame is this here?
We can say it's 1 minute,
Okay,
right? So
okay.
the day starts, let's say, I can just put a line chart because candlesticks will be.
Oh, cool.
Right? So at some point, you get some lower lows, lower highs, you break that structure, and then, the stock. And again, I'm trying to guide you through what the true adjustment day looks like, so you understand what happens. So when you see something, let's say, different than this, maybe you can say, maybe this is not the true adjustment day. So you can stop fighting the tape, let's say, right?
Yeah.
So again, maybe we approach VWAP and let's actually draw VWAP, which is a really important indicator.
Throw a VWAP on that bitch.
Like,
Boy.
many people, you had Wade Jess talk about VWAP. You had
Brian Shannon,
Shannon, right? Which is the perfect Jess to talk about it, right? But just briefly, since VWAP is being used by institutions as the price to buy around, and one other element is, since I can use a moving average, right? I can use a 9-period moving average. You can use a 10-period moving average.
Of course.
We both going to see different things. You can use the 9 EMA, let's say exponential on the 1 minute. I can use it on the 5, different things.
Yep.
VWAP is universal, the same, on all eyes. So it's a really nice factor of when of areas of weakness or strength. All right. So for this setup, that it's an amplified phenomenon of fear with amplified emotions in this kind of setup.
Oh man.
Not monitoring VWAP, let's say, for in terms of its action is really important. Okay.
Where would you be starting it from, the daily open price? would you say?
Exactly. Yeah. I'm not using an anchored VWAP myself. All right.
Okay.
I'm using the classic VWAP. All right. So the action, what the true exhaustion day looks, let's say in the 1 minute time frame, then we can have some lower lows. Then we might lose VWAP. All right. Then we get a drop. And at some point, most of the times, we don't really go above VWAP massively. Okay. We might get 1 or 2 max touches around this, zone, which, this is what I call myself as code, kiss of death. Usually I want that, like so many times, we have this and I say, please go to VWAP because this is the place that I can add big,
Amazing.
really big size myself. And then, I might lose it and drop even more.
Mhm.
That's the natural picture of what the true exhaustion day looks like. Okay, this is the check mark.
Okay.
So if you had, everything is fulfilled in terms of the daily and all the structural and thresholds are there and bonus factors, but you end up seeing something, let's say, like this. Okay, you can have the exhaustion, let's say, okay, and let's draw VWAP actually. So let's say this is VWAP, okay. But then, the price approaches VWAP and then goes above here. Okay?
Gotcha.
Even if it's, below the half the day and goes massively here and that does multiple touches. Okay, this is not the day. All right, I don't want to see big, movements above VWAP.
Above, yeah.
I want the price, if it approaches VWAP, to be 1 or 2 times max and stay relatively close to it. I'm not saying, it can go here or here, but not really surpass, not build higher lows and break out of it massively. Okay, that's what you want to see. Okay.
Would there be any elements? So this is the 1 minute, for example. Would there be any elements, that you wouldn't want to see a closure on the 5 minute above VWAP or 50? Do you know what I mean? Like a higher time frame close above this level,
Yeah.
you would then cancel, even if it's not, massively away. Or as long as you're literally just within and dancing around the area of VWAP, you're okay.
That's a nice question. And again, as I said, we can't put the market in a completely box. That's why I say most of the things that I do, as you see, is like,
because by this point we've already filtered a lot.
Yeah, it's but more broadly. That's the thing. You add a lot of things that are broad,
Yes,
and then
okay.
it's complex but simple at the same time, right? So it's not that I can say here, okay, this 5 minutes, let's say close. If you get a breakout above the 5 minute, don't think about it. No, just visualize the proximity. Okay, if it's still within the proximity, let's say broadly as a filter, keep it in. If it goes way above, the VWAP, and you can see it visually, just leave
Of course,
it. Okay.
yeah.
So I know that a lot of people want to use really specific filters to feel safe, but the markets don't work that way. Okay, in many places. Okay, and it's more about the swing trading that I do that this makes sense. But I think it's all around. It's effective all around. So yeah, if you see higher lows here, breakouts, big moves above VWAP, just exclude it. Probably it's not the true exhaustion day. Okay?
Yeah.
This is something that you want to see. So let's discuss my entry tactics for this. All right.
Mm-hmm.
So I'll put this, and this is the next. All right.
Yeah.
So entry tactics. I use 3 entry tactics for this kind of setup. Okay, that are based around this kind of structure as well. Okay, so the price, let's say, can start in a day, and we can put the 1 minute here again. They move up. Okay, I try to monitor when it's the first time that it shows weakness. Weakness means, okay, it beats higher lows. It has this trend up in a smaller time frame. Then what's the first time that it actually prints lower highs, lower lows? And I might initiate a short, okay, at the first break of this structure. Now, since this is riskier, I might do it with less size.
Yep.
Okay, just to build a
Build
bit
a
less.
position, yeah.
I was gonna say,
If I want to mention my size personally, right? On my longs, imagine I'm using around 0.2 to 0.25% of my equity on every single trade.
Yeah.
This is really small, right? People use 1%, 1.5. On this specific setup, I use around 0.5% of my equity. But in the past, I was using even 1%. And I can use, again, now 1%, 1.5 because I have a really nice win rate on this setup, in contrast to other things I do, okay? But I just don't want to overdo it. It's a complementary setup for me, for my specific foundation, right? So again, since this has a higher fail rate because this can create more fake points, maybe do it with half your size. Okay. So if you're planning of risking, let's say, you move a $1 million account and let's say half your risk is 5,000, right? So, or $100,000 account, right? And your let's say 0.5% is $500. Start with 250 as a risk here.
Gotcha.
Okay, and this can be your stop loss, the high of the day. Okay, you can use either this or the higher, the prior, lower high. Okay,
I
I
don't
prefer
know.
on this to use the half day.
40, yeah.
You'd have to, I mean, I don't know. I would personally have to go back, test a lot of these on the 1 minute to see how worthy this is of doing, because it seems very, very risky, right? Like, this is to get like the most ideal entry possible. It's like the first change of structure on the 1 minute the day of. So I guess the question would be like, what is the probability of this structure playing out on these days that this is happening? Like the 3rd, 4th, 5th gap up day, blah, blah, blah. So I personally would find that like, okay, maybe you won't get the ideal entry doing it another way, such as like waiting for the VWAP to get initially broken or some like moving average crossover up here. But either of those would be like a higher probability than this, I'd imagine. I'd say definitively, but I don't know how much weighting I would give a 1 minute change of structure.
Now, something important here.
Okay.
If the width of this, because this is actually your risk, okay? Let's say this is $3.
Okay.
But you have monitored the expectancy and you say, on this setup, my expectancy is around $7.
Okay.
So do you take the trade? That's the question, because
then you're looking at 1 to 2.
You're looking at maximum 1 to 2. Of course, can go more, right? But it's not. So do you risk of being trapped in right, for liquidity issues, whatever on this setup. No. So it's when it's more than large, let's say, that I'm more interested. So if it was $3 and it's 12,
Yeah.
okay, it's 15, 20, that's more, when I get
Okay,
into it.
yeah.
So if this covers, you maybe use a lower stop instead of, the full.
Okay, so let's say the lower one was $2.
Yeah,
And the
you might-
expectancy is 6 or
6,
7.
maybe you can try it. It depends on your foundation, right? What your average thing you're looking at. I'm more, basing my
High
system
for
around asymmetry, right? I really want to hit that asymmetry, whatever I do, even if in this day trading environment. So it depends on you. But this is like the first setup that I use, okay? The first entry tactic. The second one is easier, okay? So as I said, sometimes you can have this, all right? But also, you can start being sideways, going sideways, on the day, and let's say this is VWAP as well as it starts, right? I'm gonna monitor this structure, and the first time it breaks that structure and VWAP itself, so let's say this is it, okay? Here, I might try and initiate a short here, which is the break of the structure and VWAP itself. If it's trading sideways, let's say again it's 1 minute, okay? Now for this, if you trade the 5 minutes, you can monitor, what's the first red 5-minute candle, and you can short the break of the low of that first 5-minute red candle, right? First 5-minute red candle. Now, again, you short this structure, stop at the high of the day, okay? Monitor this width, okay? Or if it's something like this, okay? So let's do the same example, and you have this break, then you wait for it to reach VWAP probably. So let's say this is VWAP, okay? Now it will be more intense just for the example, right? So you can short here with a stop here, okay? The break of VWAP. So you can start here,
Gotcha.
right? And then get into here.
Gotcha.
to
So
add
then that would
the
be
other
your
half.
50, yeah.
Or you can wait just for this and just go full in.
Full in, yeah.
And the most important one, these are important, of course. Like in terms of what I do, mostly this. I can start this. Like I do everything, okay? But in terms of size, I'm more confident here than here. I can start here more slow, add here. And the other, as I said, is a VWAP reclaim. Okay, this one.
Okay.
So this is what I use if I miss the move.
Okay, yeah.
And I haven't, I was monitoring but missed this, like it went down. I'm not going to chase it. I'm going to say, okay, I missed the move. I should look at the move.
Yeah.
I don't need to chase this. I'm only in for asymmetry. I lost my asymmetry.
Yeah.
Right? So let's wait for VWAP. Or if I'm already short, this is my place to add big. Okay?
Understood.
Because either you can use some of your profits to buy.
Because you might have gone here.
Yeah.
And then if you're feeling, because no doubt there's a lot of other elements obviously that come into it in terms of, maybe the theme, the feeling, the market, the feeling you get obviously after years of experience in terms of that pressure.
Yeah, exactly.
So like these elements then might come in where you entered here, and then you get the kiss of death.
Yeah, and look at the way that you can do it, because myself, I'm not adding more risk here. I do it risk-free.
Yeah, so you break even by this point.
Yeah, and also that's an effective way to add. You can add massively. It depends on the structure. You can add massively on a stock and still be risk-free, okay? And we can visualize, like, let's do it again, because that's an interesting point, okay? Let's say this happens, right? And then we attach again VWAP, we lose VWAP. Okay, we go down, and then we slowly build back up, and then this is VWAP, and then we lose it again, okay? So let's visualize it. That's something that, it's really... So let's say you have something like that, all right? Now imagine that you started from here, okay? This is your first position. Now, I made a small mistake on VWAP here because
it was slightly higher, yeah.
You see, amateur mistakes.
Second.
So, and it can be even higher, okay? But just for the example. And let's say you added a bit here as well. So let's say your average price is around here, okay? Now, let's say you started with randomly saying 1,000 shares here. After the move goes already for me at least 2.5 to 3 hours for this setup, I take some off, okay? And then I usually put my stop to break even. What is the average price synthetically? Let's say it's around here, okay? So I will put my stop here. If it approaches again, I'm stopped at break even, I don't care, right? If you get a move here and then you get back, okay?
Do you, when you take some off, is there a percentage that you stick to, or is it based on, again, the specific trade and how you feel?
Yeah, so I want to leave most of my size until the expectancy is reached, okay? Or until the, let's say the end of the day. Even if it's not the full expectancy. So again, I'm leaving stuff for randomness even on the intraday spectrum, okay? So you can take 1/3 off, let's say, at 2 hours short.
Gotcha.
So look how you can use this setup here, okay? To add more massively without any extra risk, right? Simple stuff again. So let's say you have 1,000 shares. You take, let's say, 300 off. You're left with, you take here, minus 300, right? So this, you're left with 700. Okay. Now, a question. Let's say you wanted to short here again, okay? As a new position, right? I would put my stop at the, I didn't mention it here, right? I would put my stop at the high of that structure, right? I want to short this structure, but I put my stop at the high of that small structure above VWAP, okay? No matter how it materializes itself, okay? So I want my new stop, and let's put it with red. I want my new stop to be this one, okay? So the question is, how many shares can I add on this point in order to bring my average price at this specific point? So no matter if this stops me out right here, I don't lose anything because I have already spent time without doing math, just visually, right? So you want to, you probably would add here, which is the break of the structure, and you want to bring your new average price at the same level that your new stop would leave you just entered here freshly. So no matter if it stops you out, you lose nothing. You just sacrifice your earnings here. So look,
I would have said.
No, yes, we have 700 in, okay? How many? Without doing math.
Yeah,
that's a beautiful thing.
I was going to say 1,300, right? Or 1,000.
Yeah, you're probably right. So like we can be more robust like now, if we say that this is, let's say, the price that we entered, okay?
Yeah.
This is the new price that we entered. If I add another 700, where synthetically my average price would go? around here, right?
Yeah.
It goes exactly in the middle, right?
Of course, yeah.
I have 700 here, I add 700 here. Synthetically, my average is here. Okay, but now I have 1,400. Okay,
Yes.
I can add another 1,400 and bring it again at the middle. So you can add 2,000 plus probably. Shares. So
Interesting.
imagine 2,000 plus.
I was doing this the whole time. I was going, okay, we're taking 300 off. We got
Yeah,
600.
it's really simple.
So
right?
here we could maybe do 1,300.
Yeah.
You know, to add the extra 300, risk what we profited, but yours is way better. Yeah.
Yeah, I mean, way better. It's synthetically you create, a
makes sense,
product in your mind, just to not do the maths in single maths, okay? But just to add quickly and don't think about it, right? So you can have double the size of what you have here,
Yeah.
but there's no risk. This is risk free, and this is where usually when this accelerates that I make.
So when this comes down, when you reach the prior low, are you taking anything there?
Yes, of course you can take the same logic. Like since this is a new trade, let's say in your mind,
same
you
thing,
can take
1 to
2
2,
to 3.
3,
But again, and if it reaches the expectancy, like if we reach that expectancy, all right, you can take most of your shares off, okay? Because sometimes when you reach that expectancy, things are stocks do nothing after this intraday. Until we reach that expectancy before the VWAP, okay, you can leave some shares off to add again massively here because sometimes the expectancy can be a bit lower, and even this distance can be good again to trade if you do it risk free, right?
Yeah.
So imagine we reach the expectancy here or close to the expectancy. Let's say the expectancy was here. On this drop, forget about this part.
Yep.
Okay, you haven't reached VWAP yet again to touch it again. Okay, still you can say, okay, we're close. Let's add again here since it's risk free. Okay, to potentially capture this move, which is big again, to profit from, and then maybe we reach the expectancy, right?
Yeah.
But if you reach it after VWAP, then you can close everything or most of it and be fine with it. So these are kind of my entry tactics, really simple stuff again on the intraday level. So maybe we can go through 1 or 2 examples to start summing this.
Of course, this is great though. Honestly, this is really good because one difference I'm noticing here with yourself is that I've seen other people where it's similar in terms of the setup, not as clear and as many steps as we've gone through today in terms of filters and stuff. However, one thing I've noticed when they're breaking down entries and showing examples is that they will may enter here, may enter similar in that sense, but they'll enter like some here and some there, and and what I've noticed from when that happens is like it's much harder for them to be able to do something as strategic as this because the average price is kind of all over the place,
Yeah, I know.
And I find that interesting. You see it from like the stock screenshots of entries, right? There's entries all over the place. Is that something that you completely avoid and you just have these very specific, these 3 specific areas of entry?
Yeah, I don't disagree with it because if you're really relying on that setup for your foundation and it's a big part, right? Maybe you need to really pyramid into that stuff, okay?
Gotcha.
And you add when I was day trading, for example, massively back in the days,
Yeah.
on all these kind of small pullbacks, I was putting more size probably, right?
Yeah, yeah.
But at the end of the day, you don't want to overdo it because there are so many times that you can choke the trade, okay, and you might lose a really beautiful move. So if you have to do it and add on this kind of pullbacks, try to be slightly along the VWAP because if it goes back into that zone, okay, you need to add again or perform a new trade. You don't want to choke the trade out, all right?
Gotcha.
So yes, I was doing that stuff. I don't disagree with that stuff. It depends on, as I said, this setup for me nowadays is a more complementary setup.
As I say, yeah. So this just kind of adds a X percentage per year to your return, but you're focused on obviously the
and I want to keep it simple, right? And it's
It makes a big difference, right?
really
I guess that is
simple,
true. I guess I've never given it thought 'cause I don't really do it that way. Yeah, if you're someone that's like adding non-stop the whole way down, I could imagine you kind of fuck yourself over sometimes. Makes sense. Because like then it just makes like the pullback that much more lethal if it comes at any point before you get to shave.
But
No, it's simple, but it's complex in terms of you have your filters, but that complexity is what allows it to be simple. If again we can follow that discipline and the rules as we talked about. Amazing.
Perfect.
Yeah.
So to finish this off, it would be nice to have an example of maybe MSTR that we reviewed or something else that you might prefer to go as a market replay in the day and see this kind of entry tactics unfold and where we could add and how much you can potentially make from something. And everyone back at home, you can go through quantum computing names, right? Or SMCI that we discussed, or VFS, so that was an IPO, Palantir when it first started. Like there's so many examples that you can go and review yourselves, right? Just monitor the criteria, monitor the threshold,
apply those filters that we talked about.
Yeah, go into the day and see all these things kind of unfold, right? Is it worth to trade that trade? Was it how much could I make from this trade? So let's use a market replay to go. You want to do MSTR maybe?
Yeah, let's do it. Yeah.
So we agreed before, right, that that this could be later on after this was the structure, the state, the slope, right? And then here we agreed that this is through the volume, first time hitting 500, accelerated from 3 days, gap up as well here. The next day could be a probable parabolic short, right, an exhaustion day. So if we add everything that we discussed, okay, since this due to extremeness of the move and hitting bonus factors as well, can we expect maybe a 20% drop?
Yeah,
maybe we can, right? So from $500, if we go down, let's say around 20%, we can say okay, maybe 380, 390 is maybe probable, right?
Yeah,
or for close to 400, let's say. So let's go into a market replay, and this day was, as we agreed, 21st of November 2024. Okay, big favor for the editor here because as I press this, the note showed up. Okay. As I press the button, maybe you can start from here just for the people maybe to know. Okay.
It's okay.
So we go to MSTR on 21st of November 2024. So let's put MSTR here as a ticker. And we can go, minute by minute to see, this is not adjusted, split adjusted, right? But probably the 1 minute time frame will show exactly as it was back then, back in time, right? So let's, start unfolding, the price here. Okay, so I can zoom in to see where possibly we could, start a position on MSTR based on the entry tactic. So could probably this be the first kind of short as we break the structure and we go sideways into the day into VWAP? That could be one, right?
Yeah.
Let's say you might, we can do that. Let's do with shares, all right? So again, let's actually do it, all right? Calculate the full position and do the whole trade. So let's say this is a structure again, right? If we break kind of this structure, okay, here, and we build some lower highs here, and we lose VWAP again here, okay, maybe we can initiate the position, right? So if I say that I want to enter at, let's say 5.25, okay, I can put my stop around 5.35, right? That's a $10 stop.
Yeah.
Okay. So if you're risking, let's say your capital is $100,000, $1 million, $10 million, it doesn't matter. Okay, let's say 100,000. If you do it the way I do it, okay, and we can do it with 1% here, okay, and maybe some people risk 1%, or let's play it safely. What do you want? Safely or
1% fine, yeah. Easy number to work with, yeah.
so 1%, right? 1% out of $100,000, the risk is $1,000 risk, okay? So if you have $1,000 risk and the width of your stop is $10, how many shares can you buy on this kind of short here, right? Max 100 shares, right? So you can buy 100 shares, and if it hits your stop, which is $10 up, you're gonna lose your risk, which is $1,000. Simple stuff, right?
Yeah.
So if we put a stop, let's say order at at the break of this structure, let's say 524.99 or something, okay? 524.99, and we go with 100 shares, right?
Yep.
So, okay, so if I continue this, so you see the order, for example, here, and this is a nice thing to do, right? I think there are many alternatives, but if you're a day trader, to go back in time and do your day trade,
simulate, train your eyes.
Yeah,
get the reps in, as they say.
Exactly, and simulate stuff, what you could do differently, where you could do differently, right?
This is how you develop your confidence in the strategy as well as your filters. You start to develop your own filters and your own rules.
Yeah, exactly, right? And I was using similar tools to this, back in my day trading days. Nowadays I don't use them because I'm more long term, right? But this is, one way I refined my skills back then. So what I forgot to mention is, before we do that, as we said, we have a $10 stop, right?
Yeah.
And the expectancy is probably more than $100. So it's worth the trade, right? We have 10 to 1, 12 to 1, 13 to 1 probably. And we had to put the stop loss here, right? If it takes us out, we're out. And what I forgot also to mention is I only give for that specific day 2 attempts. It stomps me out one time, I can try once more within the day.
Gotcha.
If it stomps me out again, I'm out. I just delete the ticker, I don't want to see it. Again, that ego thing, right? For these kind of setups only. So right now we're in, right? So as you see right now, we're 1 to 1. We're $1,000, we're $1,000 plus, right? From this kind of risk. So if this goes around to, $3,000 profit in this kind of term, or 3 to 1, you can cut some off, right? So now have it in really, high speed. So right now we hit around 3 to 1, okay?
Yes.
So can you take, let's say, 30 shares off?
Yep.
Okay, so we can take 30 shares off, right, out of the 100. Okay, so let's say this. So we still have 70 shares with an average of this price, right?
Yeah.
Now what can you do? Either I will leave this to full expectancy, right? Or I wish, all right, I say, please go to VWAP because I want to add the
course,
I don't care this, of course if it goes to expectancy, that's a good thing. But if you can add massively, that's where the outlier trades in this kind of setup happen. Okay, and most of the times, as I said, the natural occurrences for that VWAP to be, reclaimed again. Okay, so let's see. I remember this, this kind of setup.
It's more water,
so
god
I
damn.
can, go a bit later here and zoom out just to see what I mean. Okay.
Okay, yeah. See it.
So we still haven't hit the expectancy, right? We're at $400. We hit 420. Okay, so as we said, we have maybe some room more. Oh, now I rebuild it. Okay. Okay, that's bad. But just for you to see the ad, what I mean by the ad. Okay, so let's say you have still 70 shares. Okay, and you notice that this kind of climbs up.
There we go. Yeah.
And you're at this point, all right?
So at this point we've gone. The low was about 425, 426.
And we said our expectancy is around these levels below.
Yeah, about 400. Yeah.
Or something. So if we haven't hit the full expectancy yet as well, all right? Or let's say we are close. And our average price is up here from where we started. Now, as we approach VWAP, if I saw this go, here and here up, would I want to add? No, okay, because the chances are lower. I want this to stick around here if I want to add. Okay,
otherwise, is there any sort of like price range you look at, or is it just when you look at it?
It's
this is where the intuition and subjectiveness.
Yes, but it's not so hard, right? Like put some deviation in your mind around here. You can understand when this thing looks, really like if it holds at base and the breakout.
We say price action as well.
Yeah,
if you're seeing really strong closes, bullish wise.
Yeah, and higher lows and breakouts above VWAP, which is a sign of strength, right? So let's see what happened here. For
example, you can just wait, right? That's the other thing about this is like, you don't have to. You don't have to like get filled out with limits here, right? You can like wait to see if it comes to VWAP. If it flips it, then loses it. Then it like changes structure lower. Like does it just pierce it and come right back, etc., right? You don't have to like kind of force a decision.
Structure again. I want to add. Now how much can I add? How can I supercharge this move, right? So let's do it. Actually, let's do it. If can I do that? Yeah, probably can. So let's say our average price is here. This price, we know that. All right. This is around the level. We don't visualize. We don't know yet. Let's say we wanted to short on this level.
Yeah.
But let's say our average price, we wanted to be around this level. Okay.
Okay.
How much can I add? Probably
So we have 70 right now. That's break even.
Yeah.
So similar to our earlier example, would it be
maybe at least 2 times what we have already, right?
yeah? So 100.
You don't need to just visualize it, but wait for the structure itself. I'm just giving you some hints
Mhm.
when it emerges and when you are more sure, right? You don't want to add when things are not looking perfect. So now
Of course, yeah.
I see that, then we
Slow
might
down.
use the VWAP.
Yeah.
Okay, let's see. Okay, so now I can add here, right?
Mhm.
Or wait a bit, right? Like this structure, now I have the speed 1 minute per second, right? This you had time 5 minutes to see. Okay, it rejects the VWAP, it's trading again
Instead of
below. I
stepping
can
in,
step
yeah.
in here, right? Maybe. So let's say you have to put your your new stop loss here, and you want your new synthetic average price to be here. So let's do without any calculations. How much can you add from the 70 shares you have, right?
Mhm.
So let's say you could, you want to add here, treat it as a new trade. Your average price is here, and you want your new synthetic average price to be here, so it's risk-free again.
Mhm.
So if I add another 70 shares,
It'll be up there.
it will be the middle of this, so it will be around here.
Yeah.
Okay. So if I had another 140 shares now, it will be around here probably. So I can add around 230 maybe shares without any complex math. So I can keep my average price around here
Yeah.
and still be cool, right? But 230 shares are a lot, okay? For and still be risk-free. So
It's bigger than the
let's
starting
actually do it. Let's go
position.
maybe 1 minute back. Okay, so let's say you from here, okay, you I want to see where the average price will go, right? So let's put it on lower speed first. So I can initiate the trade probably. Do you see where the average price went?
Just above here.
So I can add even more, okay? Probably. So let's add another 80. Okay?
Mhm.
Now look at this size. Now we're 300, okay? And let's say we still keep it at 350 or something, 330, right? Now that's a big size, okay? So let's reveal it actually. Let's go by the end of the day to see, what this trade could do for you. We already got a partial before, right? And you just leave for the max expectancy. Have we reached expectancy yet? We're still at 4.8 or something, right?
Yeah.
So we're there.
Close
This
it,
is where you sell. So do you see this trade? This is $30,000.
Of,
And your account was $100,000.
we did
So that's a
1,000.
30% increase in a day. So that's the optimal scenario. Of course, you might do some wrong cuts, you might not start with
course,
that
yeah.
size, but you can see the potential of 5, 6, 7, 10 moves like this in a year. And we haven't we can go through examples of quantum computing names and everything from this year, the previous year. It's 5, as I said, 5% moves.
I mean, the
6%,
thing
10%.
is, like,
really decide-
this concept is not, it's like, you can do this all kinds of trades, right? The whole concept does not apply to just this trade he's talking about. So it's not much of an outlier as he thinks it is. We're doing this right now, just some random ass fucking everyday routine type fucking long. Nothing crazy. We added back this bitch too. It doesn't have to be no parabolic move. Also interesting, we're reaching that first zone of interest, right? We have broken down from here now. At least for now. We'll see what happens when I retest this stuff.
To over risk either.
Yeah, it was 1% risk and break even after the first part. So everything that came after that was risk free. And
Very interesting because when I've seen these examples, again, not as many filters as we talked about earlier, etc. But when I've seen these examples shared, a lot of people go, "Oh, this is the setup. I go all in."
No, no.
They go really heavy size. How come you don't do that? How come you still you elevate the risk? Yes, but only in respect to the risk that you usually use.
You have to understand that, as I said, everything is just a probability. There's not a certainty, all right? You can risk your whole career in any single trade. Okay, and even 1% is a stretch. As I said, I'm risking 0.5 myself.
Yeah.
Because I understand the risks. Okay.
Well, like the thing about this though is like, okay, I don't know. In the video, they've been using 1% example. But if you do actual like variable risking, it's like right now he's like advocating not to. But suppose you do, right? Suppose you kind of have a pretty good intuitive sense of the kind of move you're seeing, and you do your risk higher than normal to catch that outlier, and then you do this position building on top of it. Those trades are even more juicier, even
you don't need
more.
to have a really good performance in a year. As I told you, this with 1% risk, which relatively it's okay for day traders. It might be big for some other traders.
Of course,
but,
yeah.
It's a let's say a risk that has been massively used. Okay, so you see that even with that, okay, from a single trade, one time per year, you can achieve 10, 15, 20% gains. What's the average benchmark gains? But what do you want to achieve actually from this market? How smart do you think you are? Okay, so you need to adjust your goals, okay, with who you are, okay, your skills, and also what happens on average. So I think that a performance of 80%, 100% is really, 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 really good.
Course, yeah.
Okay, and you can achieve that only by this setup, through a year with minimal risk. Okay, and you need to understand if you go for more, because I was in a phase that I really pushed the gas in the past. The competition was one of these phases, right? And I could even overdo it. You need to understand the risk that you're taking. Okay, the game is about longevity. Okay, that's what you have to repeat over and over in your mind. Longevity is the game. Okay, so that's how you don't overdo it, and you respect your risk and understand You never want to have a traumatic experience. You want to link the other day, okay?
I think some people chase that dopamine, right? That thrill that comes with obviously, sort of stepping up the gas and
Yeah,
etc.
and I get it. But
Yeah, I mean, we all get it.
longevity is key.
Should we take a look at just one more entry example? It doesn't have to be in terms of simulated, but
Yeah,
just,
for sure.
maybe the SM, was it SME?
Yeah, what SMCI? Or
SMCI, yeah.
we can do something else like, Qubit.
Anything, yeah.
Well,
yeah.
Do you see again? I didn't remember that, right? Do you see again the action that we discussed? It's the picture perfect, right? Drop, kiss of death, then again drop, right? So you wanted another tactic. I'm trying to remember other tactics. What should we use? Like the first one?
What do you mean, sorry?
I mean, did you want to go over an example as a whole, or just review
Just the entry. Yeah,
Oh, okay, perfect.
Yeah, it doesn't even have to be, like I said, simulated. I don't know if the other platform lets you look at the 1 minute. It's more
No,
so
it
just to show, hey, these rules that we talked about, here's another example, and so on.
Yeah. So we can do this one.
Yeah.
This is a thematic one, and review the entries again. Yeah, perfect. So I need to stop the recording here
No,
because this is probably
no, it's fine.
keep it.
Yeah.
Okay.
Yeah.
So
The least amount of recordings we can.
Yeah.
The better for them. No, but it's fine because they'll keep it. They'll edit out any chunks and whatever.
okay, so we were here. So maybe let's do another example about we reviewed let's say the market leaders. Let's do a thematic one, right?
Yeah.
Like a Qubit that we discussed before.
Mhm.
Okay, and again, it's your homework to do. Go back into that stuff and review them, guys, right? So we agreed that this is a textbook looking setup, right?
Yep.
So next day it could be a nice day. Now, if we go and add everything up, that was we reached the threshold, right? So it's a thematic move, so we can expect around maybe a 30% drop, 30
Yeah.
plus maybe drop,
Mhm.
for sure, right? So let's go into the next day after this, which is the 19th of December 2024, which did happen here, right? And let's go into the simulator to see that, right? So this is, we need to cut that part because I revealed it already. Sorry, we're back here, right?
Oh, don't worry. Yeah.
So let's go to 19th of December 2024 and put Qubit here. You can go back and start to review some of the entries, right? To close the MSTR from here to start fresh. So let's zoom in. Now, you see immediate weakness starting off from Qubit from the 1 minute.
That gap down, right?
Yeah,
Mhm.
right? The day starts and it's, you start with a gap down. So much of the expectant is already absorbed.
Mhm.
It might be worth taking some trades, but, and the day starts with that drop. So do you do anything? No, you just wait.
Mhm.
If you can find a setup, okay, that it's tight enough, and the expectancy, still has room, then you can try it, okay?
Yeah.
So or maybe wait for VWAP later on. It depends on how, it materializes itself in a day, all right? So let's increase the speed here and see if it was worth at any given point. That's why I said I want to show you the setup. Both if you're long, okay, take a nice, sell.
Exactly.
Like if the expectancy is there and if it materializes good inside the day, then maybe it's worth probably a short. Okay, so that's a first, let's say reclaim short, reclaim to the VWAP. Can you take a short like that and stop here? That would be one of my entries, right?
Exactly,
The shorter time reclaim to the VWAP. Okay, that would be one. Okay, if it stops me out here,
You still have one
I
opportunity.
have only one opportunity. Okay, to do it. So probably that would be the entry here, right? Entry here, short here. Let's say we visualize we're in.
Yeah.
Okay. Now the only time probably we're starting to to reach the expectancy.
Yeah.
Wait,
the only time
what?
that I can get in to do it. So one, okay. If it stops me out here,
You still have one
I
opportunity.
have only one opportunity, okay, to do it. So probably that would be the entry here, right? Entry here, short here. Let's say we visualize we're in.
Yeah.
Okay. Now the only time probably we're starting to to reach the expectancy.
Yeah.
Seems
the only
super
time that I
aggressive.
can, get in is only if I have one and only loss again of the VWAP reclaim after this massive drop. That's the only thing. I'm not doing anything. Imagine we are here, okay?
Yeah.
Again, I'm gonna sell at 3,
Yeah, 1 to
2.5 to
2.5.
3 hours. The partial move the stop to break even around here. I'm not yet stopped because the partial would be around here, right?
Mhm.
So you wait, and you actually here, we got close to VWAP, we haven't yet reached it,
Got
right?
it. Mhm.
So
So
we
you
wait.
need to, doesn't matter if it's that close. It has to reclaim. It has to touch.
Yeah, I want that reclaim, okay?
Got you. Mhm.
So for example, I can, let's go deeper to see if there was any. Okay, so here we cut the VWAP, right?
Mhm.
And as I said, I don't want to see extremely aggression. I don't want to see something going over here,
Got it.
right?
Mhm.
I mean, you can expect some movements, all right? But
Just
I
slight
don't,
deviation.
I don't want aggression, okay? So let's see, and you can only enter if it loses. So far, based on what we discussed about the natural view of the intraday action, does it fit the action?
Yeah.
Weakness all day,
Mhm.
minimal touches to the VWAP. This is the first official big reclaim after the short term here.
Mhm.
Okay, here we lost again the VWAP. Okay? This was not extremely aggressive. It's a deviation that can handle seeing, this candle here. So you can actually short again here, bring, your average around the zone here. Okay, and let's go into the end of the day. That's the full move. So again, as a picture, do you see how it again complements what we said? This is the true picture intraday of the exhaustion day. Of course, not everything is going to look the same as something else.
So like with this one,
Yeah.
it still fits the criteria and everything is met, and there are trade opportunities too in this example. But the difference being that we gap down. So it changes the dynamic.
The
It changes.
difference is we gap down, as you said first.
And even on the day, this is if this was in real time, that gap down would change, like,
Yeah, the way
our
you
general feel as well.
You
on
don't
that
want. I
particular
prefer gap ups because it's more expectancy from you, right?
Mhm.
So that's why I said this setup. Take it, see if it fits on your foundation.
Mhm.
Okay, you can use it if you're long to sell more effectively. You can skin the cat with options, like
Yeah.
whatever. Like see if you can take anything of this framework and put some parts into your foundation. Okay, to reinforce it. Okay.
It was similar to what you were saying. Well, we mentioned silver earlier, but we were talking about how everything met criteria-wise.
This is what I meant, right? When we were kind of first watching it. In terms of like, at the end of the day, you got to be watching it on the open. Like all these trades are the same, right? You're just watching it on the open. Because you have to see when that crack happens.
And put out was it a tweet or post, right, saying how tomorrow or the next day or two you should expect X, Y, and Z.
Yeah.
And it happened.
Yeah, it happened. Yeah.
But what does it mean for your trading side?
Exactly.
Man, I don't know how people trying to
as I
take
said,
those
we-
trades in the higher time frames. It seems like so inefficient.
have this expectancy to know if we should, go in massively or not, right? So the structure was there. Of course, if you see my post, I said, because I know this is intuition also, right? I know that commodities tend to make it hard, okay? Meaning oil or silver or other assets and commodities, right? So everything.
I guess in
worked,
regards to the
okay,
entries.
the move worked exactly the next day after I posted, the tweet up
Should
there.
we take a look at the
Yeah, we
chart
can open the chart here, right? And the move happened, but it all happened, on SLV as a proxy of the silver, right? You can trade futures, you can do whatever you want, but all this move, even if we were right about what could happen, right? This is the post here, okay?
Mhm.
So do you see this big extension here? Do you see
Exactly,
this
yeah.
big increase in volume? Everything that I talk about, and this is extremely recent. Yes, silver had its biggest drop in a single day in its history that day here, if you go and open the futures, whatever, right?
Mhm.
But, could you actually profit a lot from it the next day as you could? No. So structurally, it makes sense. How it made sense? When I made that post, if someone was heavily long on that silver, and maybe he piled up really hard here, that's what the mistake is.
Mhm.
Okay, so if you're a day trader and you're thinking you're buying into that narrative and you go really big on where you shouldn't,
Mhm.
okay, that's where trouble can, come ahead. So this was really painful for the late buyers. So again,
Exactly.
to get back to your point, nothing ever, happens in the market as books write it.
Mhm.
Or as I tried my best to show what happens on average, not the perfect looking things,
Exactly.
what happens on average, but you have to put your intuition and your experience into play of where you should hit the gas or
Exactly.
where you should, with
True.
So just to finish up, in regards to, as we mentioned a couple of times, now the traders and the viewers should go away and apply this themselves. Go and look at the tickers, look at these rules and apply these filters so that they can see,
True.
the different rules playing out, right? And how these filters that we've talked about actually apply to the market. Are there any tickers other than the ones that we've gone over already that you would recommend people to go look at so that they can do that homework essentially?
Yeah, for sure. Like what everyone should do, all right? And I suggest that to everyone is, no matter what your framework is, all right, your style, swing trading, day trading, go over the best performing teachers in history, okay? Things that accelerated 300% in a short amount of time, 500% in 2-3 days. Okay, and nowadays it's so easy to do. Okay, like in the past you have to do everything manually to find all that stuff. Now you can write some code with some, help of ChatGPT or other, Gemini,
True.
Lexi, whatever, right? Write some
True.
code, use a service provider, and find all the teachers.
Mhm.
Okay, so the example, that's what I did as well in my recent studies, right? You can find countless of examples. The more you study, the better you will be. Okay, and then listen to yourself. What is my foundation? Am I mainly going long? I'm a day trader. Whatever I do, can I fit into some of these parts that Mar has taught me into my framework or has spoken about, right? So study as much as you can. All right, it's so easy nowadays. It's the only solution for confidence. It's the only solution for trust. It's the only solution for true clarity in the market and true mastery. Study all that stuff and see how they can fit in your framework. Okay, and the examples are countless. You can never stop if you want. All right. Yeah, so that's about it. I hope this was helpful.
That was
and
incredible, absolutely incredible, and thank you for going into so much detail. And it was a first for us going into examples coming back, but I loved it. I'm sure the audience loved it. Everyone, drop a comment with your biggest takeaway from this episode. Any questions that came to mind, drop them in the comments below as well. Links for Marius will be in the
Interesting.
description, so make sure you go check him out. True honor to be able to go through in such depth into the parabolic short. But other episodes are on screen right now. Hit like.
Boom, boom, boom. I mean, overall, like, nothing new, right? Basically, more or less. Interesting nonetheless, I suppose. What time is it? It's 10:30. Goddamn. Goddamn. We gotta start figuring out what we're doing here. Boom, 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 boom. Let's kind of switch this. Oh, yeah, and the option stuff. Gotta figure this out real quick. Interesting. Boom, 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 boom. Oh my gosh.
Screens based in the street, cowbell sharp with the 808 heat. Price look dead, but the data spoke. One clean bounce on the floor.
Yeah.
They sold the bottom, that was their mistake. I waited,
I think I'm gonna snack on. Boy, I'm hungry. Boy, I'm hungry.
got lift and I move, got sleep. No rush on the entry, no fear in the red, just patience, pressure, time and speed. When the low gets swept and the strength survive. Bullish, bullish, brings it back alive.
Yeah, we're gonna do that. I need something to snack on while I look at the rest of this stuff.
No chasing. Sweet, pixel perfect, feel the heat. Bayou area high, we plot the zone. Map is the king up on the throne. POC, the center of gravity. Trading on data, escaping depravity. You're lunging the wick, you're losing your head. I'm stacking the millions, I'm staying ahead. The math is the math. The math is the math. The math is the math.
The math is the math.
Watch it go. Watch it go.
like a knife.
The math is the math. Marco's trades. Believe. The math is the math. I see them doubting when the screen turns red. Listen to the noise filling up their head. I'm looking at the auction, looking at the range. The ledger stays the same even when the prices change. They want a magic trick, they want a lucky sign, but I'm just busy drawing out the 618 lines. So triple execution while they're paralyzed by fear. The entry was decided on before we got here. You see the vision or you see the fog? You're reading the tape or just the blog. Some people see the truth, some people see the floor. I see the liquidity, then I'm asking for more. Do you believe in the math or not? Do you see the only path or not? The volume is high, the logic is raw. Do you believe in the math or not? The math.
This shit's kind of hitting right now. God damn. Nah. God damn.
Institutional flow, yeah, the volume is deep. I'm hitting every target while the city's asleep. Custom silk on, watching candles start to wig. You're looking for a reason.
What's happening over here?
It's not about the feeling, it's not about the gas. It's the probability leading us to the success. Exotic locations, the connection is clean. A ghost with a purpose inside the machine. Value area high, value area low. The math doesn't care where you want it to go. Do you believe? Do you see?
Any questions or no? We gotta nerd out a little bit. We gotta nerd out, but what? Got earnings next week.
Do you believe?
I think, right? I think financials start next week.
Too easy.
This is actually, we'll put this over here.
The math is the math. The math is the math.
Marco's trades.
Believe. Believe.
The math is the math.
Marco's trade.
Really? What's features at right now?
Marco's trade. Always prepared. The market open. The market open. Surgical logic. I'm in the zone. 618. The level is hit. Institutional flow. Yeah,
This is the worst fucking. Why did they do it like this?
High off the trade. Exactly where I land.
Anyways.
Market open, market open.
I don't know, like whoever designed the fucking that dashboard right there clearly doesn't trade or something, because they did not visualize that at all how you'd expect to see it.
Market open.
All good though, all good. Let's look it up ourselves. Today's Friday.
High off the profit, easy money. High off the profit, easy money.
618. The math is the math.
High off the profit, yeah. Easy trading in the zone. High off the profit, yeah. Blue sky, easy money. High off the profit, yeah. Easy money, easy trading. High off the profit,
Interesting. Interesting. I'm looking at this data actually. I just thought like the most interesting way to try and visualize this. Interesting. I've never seen any platform offered actually. Now that I think about it,
Marcos trades. Always prepared.
which is weird. I think someone would have done this already. Submit ourselves.
Searching for logic. I'm in the zone.
golden pocket, liquidate. Golden pocket, don't be late. Golden pocket, pocket.
Wait for the math.
Wait for the entry.
Too easy. All in pocket.
Golden pocket,
Too easy.
golden pocket.
618. Surgical. I'm in the zone.
Fibonacci, golden pocket. Marcos trade. Always.
You know, if this actually works, that would be pretty sick actually. And I don't see why it wouldn't work either. Interesting. Also, where's yesterday's VWAP on this?
Marcos trades. Always.
Okay.
Marcos trades. Rain on the driveway. Screens in the west wing. I did not buy this house. I printed it one level at a time. State talk. Yeah, it's state talk. 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 Yeah, it's state talk. Hey, mansion from the market. Blueprint in the charts. Had to build it brick by brick from the hardest parts. Foundation Foundation made of rich, roof made of patience. Windows floor to ceiling from clean execution. Gate code paid by the trades.
God damn. Okay.
Pool lights glowing off the profits I did make. They wanted fast money, I wanna stay in power. Now the whole house echo in the 808
3622.
Value area low, at the basement getting pulled. Value area high, put
Interesting.
marble on the floor.
Interesting to see if the zone holds or not.
Sitting like the fireplace flame.
This is like where like the next like local cluster is too, like right below this POC.
Stay brick by brick.
Not probably coming down here, yeah, at least.
I had the plan in the pad with the stacks in it. Kept every loss like a tax with the facts in it. Now I got chandeliers hanging with plaques in it. Market paid invoices, mansion got stacks.
I'll keep an eye on that.
Fake confirmation. Studied the range in the auction rotation. Whips in the garage like a small corporation. All from a level with proper location. This is not a rental. This is not a phase. Every room got funded by disciplined days. This is not a lucky run. This is not a stunt. I learned what value lived and I bought the front. Mansion from the market.
What's all this other stuff doing?
Charts in the office. Cuckoo parked outside. Came up off levels, not hype on the net. Not a foyer looking like a private jet. Mansion from the market. Keys on ice. Paid for the view with precision and price. They clicked off feelings. I built me in the state. One clean red. Put the chef on the plate. Yeah. Used to mark candles on a tiny little desk. Now the trade room got screens rapping left and right. Chef downstairs with the lofty getting dressed, but I still check the volume before every flight. 382 tap.
Can we do a juice box pretty soon here? Bit of a juice box.
Golden pocket shining like the knobs on the doors. Every clean retrace set it wings to the flows. I do not need noise when the data got weight. Quiet little intro by the 12 car gate. Hi-hats flicker like lights in the hallway. Big dog view from the top of the car.
I'm starting to fall asleep. Getting tired, boy. Even if I end up chilling for a bit, maybe I should just do that now. I don't want to be thinking about this later. Should be good. Bring this thingity thing back here.
Before they touched my soul, the fourth room was silence, the fifth was learning range. By the time I reached the rooftop,
Oh, really?
mansion from the market, gates open wide, charts in the office, cuckoo parked outside, came up off levels, not hype on the net, not a foyer looking like a private jet, mansion from the market, keys on ice, paid for the view with precision and price, they clicked off feelings, I built me in the state, with one clean red, put the chef on the plate, Marco's Trades. Every wall remembers a rule. Every room came from restraint. The market did not give me a mansion. It gave me a blueprint. I built the rest.
Marco's Trade.
Doesn't seem like we missed anything here.
Check the ticket. Check the levels. We only fly one way. Let's go.
Okay.
The champagne is cold and the seat is on recline. I'm crossing the ocean. I'm feeling so fine. I don't look at the news. I just look at the trace of the golden parking. Coach. Staring at the red on my 30,000 feet with the math in my head. I saw the 618. It was looking so sweet. Now I'm dancing in the clouds while you step on the street. We're catching first class fares, flying way above the rest. Putting all the golden levels to the ultimate. The math and the masses fly. The shoulders get grounded, we're hitting the sky. Bounce to the rhythm, feel the luxury groove. Every single fib is a power move. Got 'em. That's the way that we
Interesting.
the cocktail in my reach and a pen in my hand. The rhythm is infectious, just like the trend. When you follow the math, the fun never ends. I see the point five, it's a beautiful sight. Like the city lights glowing in the middle of the
Hmm. I mean, whoops.
There's plenty of room in the front. If you know where the level is. Next stop, the moon. The math is the math. Got 'em.
Yeah, like you really don't want to be losing either of these rates, basically. Like, okay, maybe you'll tolerate losing this zone down to here, but like once you start to lose this, it starts to look a little suspicious, right? Starts to look a little suspicious.
Marco's trades.
Because like this is the value area of this, and like the higher time frame. There's like even with this stuff, the same node. And like in terms of like perps, this is like basically where most of the smoke is at. This and 62388, which is like this zone. There's like a big ass high leverage liquidation right here. So if both these people get got, ding ding, and then we start hanging out down here, yeah, it looks pretty suspicious. Might be seeing a more larger pullback. Might even just come back down to the lowest. Might be it, honestly. We are starting to see like 3 drives of divergence too in like the higher time frames, although not very strong. But if it starts to play out, this is how it would begin. Are we about to reverse at our yellow fucking line or no? No. I'm thinking if I want to start adding back to the short here, if we start to lose this. That as of now, I've not added back to that thing. This might be it. Might be time to do it. Let's see. Have to keep that in mind though. Did I close my other tab? I did, damn it. Okay.
From the sweet to the sky, I keep the plan steady. Let the price come by. From the convoy to the chopper, from the dock to the view. Every place I land, same thing I do. I trade from the back
597.
city unfolds. Helicopter lift when the market gets cold. Yapped on the water, but the plan stay controlled. International, I do not stay in one place. New time zone, same clean trades. Price comes back and I know what to do.
Okay.
Different countries, same job view.
I mean, other than these 2 levels, we already talked about the stuff from yesterday, right?
Marco's trades. International.
Like this thing's either gonna hold like 382 slash like the zone that we're in right now.
No borders.
You state VWAP into this value area low zone. Other than that, we already talked about it. Leave that. Lower levels discussed in yesterday's juice box. Boom, boom, boom. Basically, right? And that's thing I don't even know, right? To like maybe wait for it to like reclaim the VWAP perhaps. I don't know if we're looking to get filled particularly aggressively here. Boom, 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 boom. Yeah. And the shorts, the shorts. Hmm. Hard to say, right? The thing is, like, we were kind of talking about this earlier, like when we first got on, but like this kind of breakdown was, I guess, right at yesterday's Valley Area high. Other than that, I don't know if I'd be taking anything else at this point, unless it's like some breakdown way lower here. Probably should be waiting for the higher levels. Maybe like this kind of retest into like the VWAP just to grab the single prints and go. Maybe. A little risky though. A little risky. Plus not much volume going on right now. Dun, 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 dun. Yeah. I mean, we'll put first and foremost like the higher time frame levels above. For sure, right? It's definitely the best bet. Bum, bum, bum. And then yeah, maybe you can weasel in on this like single print grab at the VWAP. And then some kind of bearish retest of this like Valley Area low. Somewhere in this region. Like this kind of thing. Boom, 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 boom. Yeah. Are we missing anything? Not really, right? But everything, I'm sure some people were taking this 886, right? It realistically is just another opportunity you could have taken. Personally, was not looking to take that myself, but I'd imagine there's plenty of people who took that. So you're kind of, this would be like the third entry essentially at this point. You're chasing it a little bit. Should do it, right? Are they all like this? Yeah, a lot of bear divs too. Interesting. Okay, we'll delete that. Delete this. Kind of got that covered. And we'll take some. I'm gonna start getting ready for bed, right? Got that shit out the way. And we'll take like some magnesium and whatnot. get ready to start shutting it down. I'm trying to get a good night's sleep. Trying to get a good night's sleep. I don't want me kicking it here too long. Bum, bum, bum.
POC, watch it go. POC, watch it go.
It's so perfect.
The math is the
Levels, elite life, cutting through the market like a knife. Value area high, value area low.
The math is the math. Marco's trades. Believe.
Believe.
The math is the math. I see them doubting when the screen turns red. Listen to the noise filling up their head. I'm looking at the auction, looking at the range. The logic stays the same even when the prices change. They want a magic trick, they want to let you sign. But I'm just busy drawing out the 618 lines. So triple execution while they're paralyzed by fear. The entry was decided on before we got here. You see the vision or you see the fog? You're reading the tape or just the blog. Some people see the truth, some people see the floor. I see the liquidity, then I'm asking for more. Do you believe in the math?
Or not,
Do you see the only path?
or not.
The volume is high, the logic is wrong. Do you believe in the math?
Or not.
The math. The math. Believe or not. Institutional flow, yeah, the volume is deep. I'm hitting every target while the city's asleep. Custom silk on, watching candles start to wig. You're looking for a reason, I'm just looking for the click. It's not about the feeling, it's not about the gas. It's the probability leading us to the success. Exotic locations, the connection is clean. A ghost with a purpose inside the machine. Value area high, value area low. The math doesn't care where you want it to go. Do you believe in the math?
Or not,
Do you see the only path?
or not.
The volume is high, the logic is wrong. Do you believe in the math?
Or not.
Too easy.
Or not. Believe. Or not.
The math is the math.
Go to the math. Oh, to the math.
The math is the math.
Marco's trades.
Believe. Believe.
The math is the math.
Marco's trades. Marcos trades. Always prepared. The market open. The market open. Surgical logic. I'm in the zone. 618. The level is hit. Institutional flow. Yeah, you're feeling it. High off the profit. High off the trade. Exactly where I land. Market open. Market open. Market open. Market open. Stay alive. Market open. Stay alive. Worldwide trading. Market open. Market open. Marcos trade. Always prepared. Too easy.
Drawdown.
Market open.
Okay. Let's wind this down, put something a bit more chill on. Else we ain't going to bed anytime soon, but what? Look. I need to wind my ass down. And this magnesium stuff, you have the craziest dreams, I swear. I usually remember them a lot more often. Bum, 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 bum. Hmm. You know what I realized is quite interesting actually? But I didn't have that many books with me back at home. I had some books. I had some books there, and some that I had left there that I read a long time ago. The trading books. So I ended up like rereading some of them again, and it's like quite interesting actually to read these books again after like a long time has passed since you last read them. Quite the experience, if I don't say so myself, actually. Oh, true. Should we watch a a video? I remember watching a video from this guy forever. I wonder what this guy's up to these days. Actually, I'll just do that. We can just kind of chill. Don't really need to take notes or anything. Kind of see what he's thinking, what he's seeing. But I found this guy quite insightful. At least when I was first like finding people on X. I mean, out of all the people that are on there that are like actually grifting, this guy's at least like seems to be actually a trader, right? I don't know how good he is, but like at least he understands fundamentally what's going on for the most part. Let's kind of give him a view, right? Give him a shout out. I haven't listened to this guy in ages. I don't know if he even makes videos anymore, to be honest.
Crypto here with a new YouTube video. It has been, I think, about 4 months since my last YouTube video. And as I've said on X, the reason I haven't made a new video since then is because for the most part, there hasn't been anything too notable that's happened since making that video. In my last YouTube video, I covered a few different scenarios for Bitcoin. I talked about a number of alts, and we talked a little bit about Ethereum in that video. Today's video is specifically going to be about Ethereum, and the reason is that I recently had someone on X ask me if I thought that Ethereum could hit $10,000 during its next expansion phase. And like I've been saying for some time now, I think that Ethereum will go far past $10,000. I think 10,000 is kind of a minimum for this next run, and I replied to him exactly that: 10,000 minimum and 20,000 plus is realistic. Now that post got a
I want to put it on.
like, times, there's a lot of
I'd
people
rather have it on
internet.
2 because I'm not trying to stay that long. But I know y'all motherfuckers be bitching because I got it on 2x. Goddamn.
On X, on Twitter, that will make claims or projections about targets for coins that they have, and they won't actually explain how or why they came to that conclusion. I'm going to talk about exactly why I don't just think 10,000 is like a minimum target, but more so why I think 20,000 is like realistic, and why I'm just so incredibly bullish on Ethereum. Now, I want to preface this by saying that we're going to go back all the way back to 2022, because a lot of times in this space, people have very short attention span. So they hear something like this when I say Ethereum is going to go to $20,000, and they immediately think this guy's a moon boy, a bull, pun intended, but they don't actually understand that I was actually bearish on the Ethereum Bitcoin pairing since 2022. Back when we were trading here at 0.08 Bitcoin, I was bearish, calling for a move down, and so basically for the last 3 or 4 years, I was betting that Ethereum would actually underperform against Bitcoin. Now, again, in today's environment, with today's sentiment, the idea that Ethereum is dead, or that Ethereum won't ever outperform Bitcoin again, or the idea that something about the fundamental thesis behind Ethereum has changed is very commonplace, right? The idea that Ethereum will magically outperform Bitcoin and go on a massive run to 10K, 20K, etc., is definitely not consensus, right? That is an opinion that is only held by a few. And at this stage, because of where we're at on Ethereum, because of how badly it's performed for the last 3 to 4 years relative to Bitcoin, that opinion is one that will get a lot of ridicule, hate, mockery, etc., etc. But again, I want to point out that back here in 2022, when Ethereum was actually outperforming against Bitcoin for 2 years, the sentiment was the exact opposite, right? Back then, Ethereum was the next big thing. Back then, Ethereum was going to flip Bitcoin. Back then, Ethereum was headed to 20K, 30K, 40K. The sentiment at the time was the exact opposite of what it is today. And some of you who may be new to the space may not remember that. Again, this is back in like 2021, 2022. So this is like when Bitcoin was trading probably around between 30 to 60K, because again, we chopped around that region for about like a year before we broke down. And so the sentiment for Ethereum, because it had been outperforming Bitcoin for 2 years, is very bullish. And just to give you guys an example, people looking at this Ethereum chart here and seeing that the 2017 top occurred and hit this level here, back when Ethereum was rising, right, we had taken these lows. And again, if you're a technical analyst or if you do understand charts, you'll understand why taking these lows and then reclaiming them was very bullish. You can actually see very clean price action here. We formed this major low, we popped up, made a lower high, came back below this low, and then reclaimed it. And you can see that actually very clean reclaim. And we started pumping, right? So we hit the mid-range. And at this point, again, sentiment is that, well, we're headed to the range highs. And obviously, once we head to the range highs, the next target is again new all-time highs. And so even back then, when Bitcoin was trading at like 40 to 60K probably, and we're going to take a look at the charts here in a second, but even back then, if Ethereum Bitcoin had reached the range highs, which is 0.124 Bitcoin, if we do the math real quick, that would have put Ethereum at around $7,500, okay? Just hitting these prior range highs. If Ethereum had made new all-time highs, that would have put Ethereum at approximately $9,000, okay? So already back when Bitcoin was trading at 60K, if the Ethereum Bitcoin pairing had continued up, we would have hit 7, 8K, 9K, 10K, making all-time highs. Today, the sentiment is the polar opposite, okay? Funny enough, back here when everyone was very, very bullish on Ethereum Bitcoin, I was actually bearish. This blue block that you see here, this little tiny blue square that you see here, is actually from a tweet that I made back in 2022. And again, this whole thing ties into the thesis that I've had for years now about Bitcoin in a massive bull cycle, eventually going to hit 100K plus. I've been saying this since like 2018, since Bitcoin was at 3K. Some of you may remember back then when Bitcoin had its big run at 20K in 2017, then it ultimately crashed and broke down to 3K in 2018, which is where I was very, very bullish. And at that point is when I talked about the idea that Bitcoin would go on a massive, massive secular bull run from 3K up to new all-time highs above 20K and ultimately to 100K plus. And so as we were here in 2022, Bitcoin was trading about 60K and we were missing this fifth wave. I'll show you the tweets here. They'll put things into context a little bit better. But again, this tweet is from October 25th, 2022. October 25th, 2022. We'll just go here to the Bitcoin chart and I'm going to go ahead and mark off that date so you guys can see exactly where we are on October 5th, 2022. This is October 5th, 2022, right about there. And so Bitcoin had already actually traded above 60K. So Bitcoin is now trading at $18,000. And again, for those of you who've been following me for some time now, you know that this was our major fourth wave, as we call it, basically our second major correction in the secular bull cycle after the first major one that occurred back here when Bitcoin fell from.
No, I will say this guy has an interesting
down
point
to-
of view, right? The way that he does this stuff is like interesting. Whether it's right or wrong doesn't really matter, I suppose, but it is interesting.
0.8K here on Coinbase, but on some other exchanges, we got wicks down as low as 3.4K. So this was the first major correction of our cycle, which we call a wave 2. Again, for those non-Elliott wave people, a wave 2 just means the first major correction within the cycle. Then we got the next expansion phase, and then we got the next major correction in the cycle. And again, this is just, in the grand scheme of things, on the macro, we have our bottom of the bear cycle, we have the first high of the bull cycle, the first higher low of the major bull cycle, the higher high of the bull cycle, the next higher low of the bull cycle, and then another higher high, making a massive secular uptrend. Okay, so when I talk about waves, I'm just talking about a massive uptrend on a higher time frame. Anyways, going back to where we were on October 22nd, 2022, trading at around $18,000 after our major third, after major fourth was almost complete. And we can go back to that tweet and we can see here that I talked about Ethereum Bitcoin. Okay, this is the Ethereum Bitcoin chart. This is the blue box that you're seeing right there. Okay, and if I zoom in, you'll notice that this is that blue box. Okay, blue box here, blue box here. This is the same exact blue box. Okay, and this was around 0.08 on the Ethereum Bitcoin chart. You can see here 0.08, right? So this blue box is again the blue box that you see here. And you'll read the tweet that basically I said that this rise on Ethereum Bitcoin is temporary. And the reason that I said that at this time back in October 2022, back at this time we had everyone cheering for Ethereum saying that it was going to take off. And so I said that this strength is temporary and it's just a short-term relief rally before continuation down. Okay, not expecting much higher in the pairing. In other words, Bitcoin likely to begin outperforming. Why did I say that in this blue box here, which literally marked the Pico top of the Ethereum Bitcoin pairing before what would be an 80% drawdown? Why did I make that claim? And again, this ties back into the thesis that I've had since 2019. Why did I make that claim? Again, if you were there, then you know why I made that claim. This comment kind of explains why though, right? So we had this follower who asked, confluence with a start of the fifth wave question mark, and I said soon. The idea was at the time we were talking about how Bitcoin was missing this fifth wave, right? Bitcoin was missing this fifth wave. Now this chart is in log scale. If I take it off a log scale, it was missing this fifth. Anytime that Bitcoin is in its expansion phase, like we saw here, or like we saw here, and especially like what we saw in 2017, when it's impulsing, which just means when it starts to trend with a lot of momentum, that's basically what an impulse is, a series of higher highs and higher lows, it tends to outperform against Ethereum and other altcoins, and it kind of gets the spotlight. We saw that back in 2017, we saw that on the subsequent rally here in 2021, and we saw it here in 2023 again, okay? So on October 8th, when Bitcoin is trading at $18,000 and Ethereum was showing some strength, I said it's only temporary because this fifth wave that we're seeing is expected to be even more aggressive and more violent than the third wave. But bottom line is this third wave took us from 10K to about 60K. That's a nice $50,000 move. This fifth wave so far, I'm going to say so far, with an asterisk, took us from 15K to 125K. That's a $100,000 move. That's 2 times the size of the third wave. So this definitely was the most aggressive expansion yet. Whether it's complete yet is not confirmed. We'll talk about that a little bit later. But the point that I want to make here is that we wouldn't get that major alt season that people were talking about back here until Bitcoin had topped for its cycle, for the secular cycle, and started breaking down, and then we saw rotation. So I've always said many, many times, biggest alt season ever yet to come, and that was in reference to the alt season that we saw in 2017. I said there's going to be a bigger one, but it's only going to happen once Bitcoin has completed this 5-wave cycle. After Bitcoin completes the 5-wave cycle, we see a massive alt season. The last 5-wave cycle that we had was back here, and it topped in 2017. And those of you who were there will remember that the alt season that we had at the end of 2017 was the biggest alt season we'd ever seen at the time. In the same way, once a 5-wave cycle completes, meaning once Bitcoin has completed a 5-wave or an uptrend of a higher degree.
I don't know if that happens, honestly. I don't know if that happens.
In that scenario, that is when alts typically take the spotlight. So when people were calling for Ethereum to start outperforming against Bitcoin and making new all-time highs, while Bitcoin still had its fifth leg left.
I mean, we'll see, but it doesn't seem like it, right? We'll see.
I felt like that was not reasonable or likely to expect, and therefore
I can't imagine, like, I don't think it's just every alt is gonna pump kind of thing. Maybe it does, but I wouldn't be betting on it. I'd say that. Like, if you are gonna bet on alts performing at some point very strongly compared to Bitcoin, I'd probably stick to like the strong ones, not just any altcoin.
Bearish on Ethereum Bitcoin at around 0.8, almost at the Pico top of what would then be 4 years of drawdown. And at that time, this chart that you're now seeing, we go back and I show you guys the zoomed out chart. Remember, I was in October 2022. This was a month later. I kind of shared the big picture. Again, there's our blue box. And this is the macro idea, okay? This idea was shared 4 years ago, and I basically said, I expect, number one, we're here in the blue square. Again, that's this blue square that you see here. And step two, what I expected next was Ethereum Bitcoin to fall as Bitcoin enters its fifth wave. Again, I talked about how this was the whole thesis, was that Bitcoin was missing that fifth wave. So Ethereum Bitcoin would fall as Bitcoin enters its fifth wave, aka new all-time high. Again, the all-time high at this point had been marked around 65K. So new all-time high with the fifth wave and aggressive price appreciation. And then the next step would be that Ethereum Bitcoin bottoms. We'll talk about this as the initial target, somewhere down here at around 0.03, and then rallies and breaks out of the multi-year accumulation range and rallies to all-time highs. At this point, once we had bled all this way down, then I would likely flip bullish, looking for a higher low. Basically, higher low means anything above the bottom, which is this level here. And then I would be looking for Ethereum outperformance to the upside and ultimately new all-time highs, okay? So this idea was shared, again, over 4 years ago, and nothing has changed, okay? We went a little bit lower than this target, but I'll show you guys when we got to that target why I also expected that and why I shifted to a slightly lower to the range lows. We'll go over that here in a second. But the point that I want to make is that this idea has been one in the making for 4 years now, and it's finally coming to a point where I do think that we're ready to start that expansion phase. And again, we'll go into that in more detail in this video. And I think I said when we were down here, it's time to start paying
We'll
attention.
see, right? At the end of the day, we'll see. It's not guaranteed. This can just start breaking down.
Averaging or whatever in the spot, because even if we go lower, downside is relatively limited to potential upside, and that remains the case. But the point is that for the first time in almost 5 years, we're reaching a point where I struggle to express how bullish I am getting on Ethereum here. And I hope this video, by the end of it, I think you guys will agree with me, but we're going to go step by step here. What happened after that? We can take a look, obviously, at the chart. It's pretty self-explanatory. This tweet here, Ethereum Bitcoin down over 20% since the initial post. Bitcoin's fifth wave well underway. Can expect a potential bounce, et cetera, right? So here's another tweet that I made. We've come a long way since I went bearish on Ethereum Bitcoin. This is now in 2024, so fast forward about a year and a half to 2 years. Now down over 50% since the original post, nearly 2 years ago, all based on the idea that in the months to follow, Bitcoin would go on a massive run earlier than most expected as it began its major fifth wave to 100K plus. That idea is now well underway. Ethereum Bitcoin has been hammered. We aren't quite done yet. In my opinion, daily sprinted another lower high despite all the Ethereum ETF fanfare, okay? So who's ready for a full retracement of this Ethereum Bitcoin move as Bitcoin moves to the upside to begin this next leg to 100K plus in the coming days? This, again, guys, was again back when the Ethereum ETF launched, right? So everyone once again got super bullish and said it's time for Ethereum to take the lead. And once again, I said, hey, hold your horses. Bitcoin hasn't yet finished its fifth wave. Bitcoin is still yet to reach 100K plus. Therefore, it's not yet time for Ethereum to outperform. Again, the timestamp on this was June 9th in 2024. Let's go back to the Bitcoin chart. Let's mark that date off. June 9th, 2024, right about here. So once again, Bitcoin now trading at about 65K. It had made new all-time highs, but had not yet reached 100K plus, which I had been saying for a long time is the minimum expectation for this fifth wave. And again, from purely a wave count, 1, 2, 3, 4, 5. So again, we're missing the fifth of the fifth, as we like to call it. If this is one fifth wave, within it, we should have waves of 5 as well. We're missing this fifth wave at this point in time. Remember, where are we in terms of price? We are right about here. Once again, a lot of people getting super bullish on this pump because of the ETF. And again, I simply said, look, Bitcoin isn't done yet. And until Bitcoin is done, Ethereum's not going to outperform. So I know this is exciting, but I'm expecting a full retracement of this pump on the pairing, at least down to 0.03 to 0.035. And again, those of you who were there, remember that back here in 2024 of June, high time frames, we were looking for the final fifth wave to the upside. And fast forward, and we got the fifth wave, finally above 100K plus. At this point, now we're thinking, okay, it's time to start looking at where Ethereum Bitcoin is, because if it's approaching this target zone, well, we got to start paying attention because it might be time for outperformance, right? So again, we're going to go back to when Bitcoin made this fifth wave to the upside. Now we're in December of 2024. We have what could be this final fifth wave. We don't know if it's yet complete. We ended up making another impulsive move here, and we were making new highs, right? So many were calling tops at 109, 110. I said, we don't know that it's the top yet. We had this deep correction. Once again, we corrected 35% from the highs. And a lot of people were saying the top was in, and I simply said, look, if the origin of the impulse, what we now know to be that impulse, was down here at 58K, the same way that we had the origin down here at 38K, then anything above that is technically a higher low. We can't just assume that the cycle is over. We assume that this trend that has been going on since 15K will simply continue until we get a significant break in structure. And so, once again, was bullish here in the low 70Ks. We would then go on to break this level, make new all-time highs, and hit 126K. And at that point, we apply the same rules that we applied here at 15K, the same rules that we applied here at 24K, the same rule that we applied here at 38K, the same rule that we applied here at 58, 59K. We applied that same rule here, and once again saying, okay, well, now we have to see how.
I mean, like, let's just kind of skim through this real quick, because I'm guessing you're just assuming that this is bottoming in the higher time frame. The gist of what he's expecting here. I'd imagine.
Go down this low, it can go down this low, it can go down this low. As long as this level isn't breached, all we have is a deep correction, just like we've seen so many times in the past, but ultimately a higher low. Unfortunately, what happened was we broke 74K. Okay, so obviously those who remember 74K, why was it relevant? That's why it was relevant, because again, it was the start of the next expansion phase that took us to new all-time highs, and therefore any correction above that level is fair game. We shouldn't go below if we're ready to continue. Once we go below, we finally break structure for the first time since 15K, and now we have a deeper correction on our hands, which is exactly what we have today. Back here, once we confirm that the top is potentially in on Bitcoin, right? This is our first break of significant structure and the first indication that the top may be in on Bitcoin here at 126K. Well, now we are looking for that all outperformance that I've been saying is going to happen after Bitcoin tops, or I've been saying since 2019 that after Bitcoin completes this 5-wave cycle, we'll finally see that alt season, the big alt season, we'll finally see all outperformance. And typically that starts with majors like Ethereum.
I don't know,
XRP.
right? Because the other thing about this is like think of the logic of that. Like, let's just think of the logic of this a little bit. Like, this asset has grown in market cap, right? Significantly. And that is because of like institutional money / more sophisticated players entering, right? The ones that have the most money. These people are also not the ones that are looking to be dabbling in like low float, low cap shitters, right? Especially hyper risky. So like, sure, this thing might run, but I don't know if people that are going to be taking profit from this are going to be rotating it into alts as opposed to like something way less of a bet. I guess we'll see how the charts are setting up if this scenario ever even plays out, but I'm just not sure that we're going to get some like crazy like biblical alt season ever again. We'll see.
So once we finally got confirmation of this break, finally got a clear 5 waves, finally got potential for the final 5th wave of the cycle to be complete, now it is time to focus on alts, okay? And I'll add that I put a question mark here because we still don't have confirmation on if this cycle, meaning this 5-wave cycle, is complete, because we can see extended waves. We call them extended waves. And to put this into perspective, guys, because it's sometimes hard to wrap our heads around this, and I talked about this in my last YouTube video, so again, if you watch that video, essentially what I'm talking about is that scenario in which this final 5th wave, this is just the first wave of 5, of a very extended 5th wave, would look like a typical blow blow off top expansion, right? So more realistically, we're talking about something like this, which is an acceleration, parabolic advance, and a blow off, right? Somewhere above obviously 126K. How high we go is up for debate, but that is what the alternate is. That's why I put a question mark here, because we still don't have confirmation. But it doesn't matter. And I talked about this in my last YouTube video as well. It really doesn't matter too much right now whether the fifth top is in or not, because we should see some outperformance here regardless. And I don't want to talk too much about Bitcoin here because that is going to be for my next YouTube video. This one's going to focus specifically on Ethereum. I just wanted to give you guys the background about why everything is kind of lining up here. And we can look at it from 10 different perspectives and it paints the same picture, which that confluence is always very important. But anyways, guys, let's go back to Ethereum. This was again June 9th, 2024. Bitcoin is now right here at 65K. We're missing the fifth wave, therefore we're headed lower. And let's go ahead and take a look at what happened from there. Okay, so from there, we had this next update. Okay, this was now in November 1st of 2024. And now what has happened? Okay, this little pump that you see here, right here, is the pump that we had referenced in the last chart. And as you can see, when I posted that, this was again June, right? June of 2024, this little pump here. What happened? It literally marked our top once again, and we bled down. Why? Why did that happen? Let's fast forward again. We're here in June 2024. Why did Ethereum Bitcoin tank like this? Because what happened shortly after June of 2024? Bitcoin got its final fifth wave, okay, or at least part of it. So exactly the reason that I said Ethereum Bitcoin continue to bleed, because Bitcoin is still missing its fifth wave. That's exactly what we got. And now Ethereum Bitcoin had finally hit the initial target that I set out back in 2022 for the first time. And if we read this here, for the first time in 2 years, I'm finally now interested in paying more attention to Ethereum. My bias is slowly starting to shift from high time frame bearish on Ethereum Bitcoin to high time frame bullish. I maintain that we are basically in a massive high time frame accumulation range that will ultimately break out to the upside. That being said, with the current context of where Bitcoin is at, not yet gone parabolic, final fifth of the fifth still en route, I think we need to be just a little bit more patient. I don't think this is
the thing about this whole like at the end of the day, it's just all gonna be speculation, assuming that these things start to go right. Because what if this just doesn't? It just bleeds out more and more. I guess that's what he's betting on.
Ethereum Bitcoin yet, but I think it's time to start watching for the formation of one. We might even make it back to our range lows, orange box, which would be the ultimate buy zone. Ethereum sentiment is in the absolute gutter right now too, so it is all lining up. Patience, the time for Ethereum is not here yet, but will be soon. Again,
and there's nothing that says that this has to hold, right? Or that this ratio has to like maintain in some kind of like range. So
2024, where is Bitcoin? November 1st.
Quite the assumption.
Bitcoin is trading at approximately $78,000 for the first time. Okay, at that time, we'd go on to hit 130,000. And going on to hit 130,000 is what would eventually and ultimately, in fact, send us lower. Now, again, this green box here, I'll go ahead and mark it off on the chart once more so you guys can see. So yeah, that green box, sorry, is this box right here. At that point, I said, we're probably going to go to the range lows, which is here at 0.023, the orange box, which would be the ultimate buy zone. And what do we have? We have a move back to the orange box, which again, if I were to mark off, would look like this. Okay, this was that orange box that I had on the chart. And this is where we have the ultimate buy zone and where we'd look for a higher low. So a higher low here, while we're at the range lows, a higher low is anything above 0.016. So I'm going to go ahead and mark that off as well. We have formed a higher low. Now, what are we looking for after we form a higher low? We're looking for what? Impulsive price action. Okay, impulsive price action again, once again, just means a strong uptrend with momentum behind it. How do we identify if there's momentum behind an uptrend? I can show you here very clearly. This was an uptrend, technically, right? Yes, right? We made a low, we made a high, we made a higher low, higher high, higher low, higher high, higher low, higher high. This is an uptrend. However, the issue with this uptrend, and the reason that it's not considered impulsive, is because as you can see, we can tell there's not too much momentum behind this trend because every time that we pump and make a pullback, you can actually see we revisit these levels, right? We retest these levels, right? You can see the overlap of each of these moves. Pump, pull back, pump, overlap, pump, overlap, pump, overlap, pump, okay? A truly impulsive move with strong momentum is not going to have these overlaps in between impulses, okay? So what that means is if you look at this structure here on a lower time frame, again, impulses can happen on every time frame, from low time frames to high time frames, just like trends can happen on different time frames. You can have a trend on the hourly, you can have a trend on the 15-minute chart, you can have an uptrend on the daily chart. And what we're looking for is uptrends with strong momentum without that overlap, okay? So what we see here is a strong uptrend without much overlap. You can see here pump, low, pump, does not overlap, does not come back to this level, right? Pump, 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 a lot less overlaps until here, which is when our fifth wave ended, right? But you're not getting that sort of overlap. You're getting strong moves up, tight consolidation, strong move up, tight consolidation, strong move up, tight consolidation. So that is how we identified that the move has momentum. Why? Because instead of price falling back all the way down to the next logical support zone, the dip front runs that zone and pumps even higher because you have buyers aggressively stepping in on the smallest dip. And so that's what typically what impulsive moves look like. And then if you want to go into that further, you should be able to break down the move into a series of higher highs and higher lows, ideally forming a five-wave structure. And that's where the five-wave idea comes from. We're just talking about uptrends, right? So in any case, what we got then was we got a potential uptrend off of our low, and we're now getting a pullback. And now we can forward to my last YouTube video where I talked about what we're looking for now that we've hit the range lows and we've got an impulse. You can see the impulsive structure here mapped out. And I said that the next impulse starts from here ideally, and I marked off this giant green zone. Essentially, once you get a five-wave move, you get a deeper correction, a deeper pullback. As long as it makes a higher low above the origin of the impulse, that is a higher low in an uptrend, and you expect the uptrend to continue, okay? So next impulse starts from here ideally. In a perfect world, I wanted to see some strength from Ethereum earlier. And as you can see, I wrote here, still like the Ethereum Bitcoin idea below on the higher time frames. I shared some weeks ago, but for now on the lower time frames, I would have liked to have seen outperformance on Ethereum to come up to the supply zone before pulling back to green, right? Now we didn't get this relief up to the red zone, and instead we continue to bleed down to these levels. And then I made this update to follow it up, okay? So I was hoping that we'd rally first and then come back to here. But you can see here that I said back here, this was May 7th, I said Ethereum USD didn't break out, but the Ethereum Bitcoin pair ended up failing to reclaim our local range lows and it's bled back down. It now seems that our high high time frame green zone below is going to be met sooner rather than later. And this is a very good sign because it implies that the bottom of Ethereum Bitcoin before its next major leg to the upside is closer than originally expected, right? Because originally we're looking for relief up to here, then a slow down. Instead, it looks like we're heading directly to the green zone. All right, now fast forward to June 5th of 2026, and we have finally reached the green zone.
Guys,
We never
yapping.
made it to the upper supply zone first. Instead, we came straight down to the green zone. And so ideally, I would have liked to have gone up here first and then come down to the green zone, but it is what it is. The next impulse starts from here. Ideally, this is exactly where we've been targeting after we got our first clean impulse to the upside. And again, this impulse happened back in, actually, yeah, literally a year ago, right? So it's been a year since we put our local top, and we've been bleeding ever since. My last YouTube video, again, where I talked about the Ethereum Bitcoin pairing, was made about 4 months ago. So you can see why there wasn't much for me to update, right? Because we were still kind of in limbo land here. And this is the high time frame zone that we were ultimately looking for. Whether or not we went up to test this supply zone first, this zone was the zone at which I expect our next impulse to start, okay? So now that we are there, this is why I'm making this video. Part of the reason why I'm making this video today is because we finally reached a point where there's actually something for me to update you guys about. Now, in doing this, in prepping for this video, I came across some stuff that just blows my mind. I look at these charts every day, but sometimes you really just need to zoom out to really get perspective on things. When that follower asked me about 10K Ethereum being a reality, and I said 10K, minimum and possibly 20K, it made me look at the charts one more time, because I'm like, let me look at them one more time. It really makes sense of where I think we're headed. And guys, by the end of this video, when you get the whole picture, I'm just so freaking bullish on Ethereum. And I'm thinking 20K is conservative. We'll talk about that here shortly. But in any case, we're down here at the green zone. We had our 5-wave impulse. And so we're in that zone, right? And now we're looking for essentially a base here to form in one way or another for expansion. Ideally, we form a nice clean base. We don't have to. We could literally just reverse from here and go straight up. There's no rules against that. But in a perfect world, if we are lucky enough, rather than just tapping this once and fully reversing, again, we've been in a year-long drawdown.
That's hella bullish.
So in a perfect world, instead of just fully reversing from here, we chop around a bit, come down, make a nice little bottoming structure, right? And then get that expansion, okay? And that expansion will again look like this, where we have strong momentum as you rocket up. Our first target's going to be this red zone, right? But ultimately much, much higher than that. And I would love this. I'd absolutely love it, because it should give us a perfect opportunity for those who are familiar with reading these charts and using this concept, and I've talked about this triple tap idea. But some sort of a basing structure. It doesn't have to necessarily be a triple tap. This is just one of the more common ones, and it's easy to identify, and it can lead to rapid expansion. But ideally, we get some sort of a base like this and then expand to the upside, okay? This isn't necessarily drawn to scale. We are in June, so this could take a couple of months. But there's other ways that we can bottom. It doesn't have to be a triple tap. So there's other structures that we can form, one of them being tight consolidation here, manipulation or deviation, and then expansion. And that is another structure which we call accumulation, manipulation, distribution, an AMD structure or PO3 structure or whatever you want to call it. There's a lot of different names for it. My point being that you're not always necessarily looking for a triple tap. I just always typically use that as an example when we have a range forming, because that's ideally what I want to see. But it doesn't mean that's the only way that we can bottom here. And there are multiple bottoming structures. And we can also just tap and go. That's another thing that we see at bottoms too. It doesn't have to base out. But a base is always healthier, and a base is always easier to enter with. So that's what we hope and pray for, right? Ideally in a perfect situation. But Ethereum has reached the target zone, okay? Now this is one part of the equation. And what is that? The first part of the equation is Ethereum Bitcoin, okay? After 4 years of being high time frame bearish on the Ethereum Bitcoin pairing, I'm now bullish on it. On top of that, we've hit the range lows. You'll recognize this now. This is exactly that triple tap structure I was talking about here in lower time frames. Once again, we talk about how these accumulation structures don't just happen on high time frames, they don't just happen on low time frames, they happen on every time frame. So over here on the high time frames, we have a high time frame triple tap within validation here at the lows. On the lower time frames, we could get a lower time frame triple tap. Again, the high time frame, this is essentially one massive accumulation range. And again, we're going to talk about this further in the video. Ethereum Bitcoin has hit the buy zone. It has printed an impulse. It has hit the next area of interest. Now we're looking for a base and another impulse. And this is the initial signal that the Ethereum run has basically begun. The next impulse will be further confirmation that we're ready to go for range highs, and they will pile on each other until we just absolutely explode. This is the first part of the equation. Ethereum Bitcoin, after 4 years, has hit the target zone. Following that, we've got an impulse, our first impulse of what should be a 5-wave impulse, like we always talk about. So for context, again, what we're talking about is this is our first wave and this is our second wave. We have a third, a fourth, and a fifth. Okay, that should ultimately take us to new all-time highs above the consolidation structure, above the 5-year consolidation.
I mean, I guess it's good to be planned and prepared if this is starting to happen, but a lot of assumptions, we'll say that.
Structure. Again, this is one giant accumulation base, so if we're going to be seeing expansion.
But it is interesting to see them give this some thought, right?
Again, the expansion phase follows the accumulation phase. Expansion phase, the bare minimum is where the accumulation began, right? If this is an accumulation range and we're going to see expansion, that means we have to go above it, right? So when I talk about bare minimum, I literally mean bare minimum being the highs. That's just getting started, but really we should expand much higher than that. Keep this in mind. This is all going to come back to one central point and one central picture. I know it's a lot of information that I'm giving you guys. It is really like a puzzle with 10 different pieces, and I'm trying to put those pieces together for you so you can see what I'm saying. Because if you can understand what I'm saying, you'll realize what a massive opportunity this is. And this is how you build conviction, by recognizing these things as they're developing and playing out over time, right? We're looking for 5 waves here at the minimum. We've already got one.
No, I'm also curious to see how some of the other charts are looking, like not just the ETH BTC pairing. We can finally look at those later on.
Going to get a third, which is typically the strongest, but in major bull runs, especially in crypto, the fifth is even stronger because this is the parabolic leg, right? So the third should be strong, the fifth should be even stronger, and we're looking for a bare minimum of these range highs, okay? Keep that in mind. This is one part of the equation. What's the second part of the equation? The second part of the equation is the Ethereum USD chart. So here is the Ethereum USD chart. For this, I want to first reference a tweet on Twitter, okay? So this tweet is in reference to the Ethereum USD chart, okay? July 2nd, this was a few days ago. I'm pretty sure Ethereum is dead. And this was a response to my post about Ethereum hitting 10K minimum, 20K plus def possible. I'm much more confident that 20K is not just possible, but realistic than I was, a few weeks ago. I've always said 10K is the absolute minimum. I think 20K is realistic, and I've said that for some time now too, because the ratios and everything that we're going to be looking at in a minute, it just makes sense. But I think it's not just possible, I think it's very realistic. Let me put it that way. So I'm not going to say it's a given. Nothing's ever a given, but 20K, I think super, super reasonable. And then we're going to talk about that here in a second. This tweet was in reference to that, which led to this guy saying Ethereum's dead. I've been hearing Ethereum is dead FUD for literally years now. This post was because everyone at the time was saying that Ethereum was dead, right? Sentiment was once again in the gutter. We were trading at 15 to 1300. People were calling for sub 1000 Ethereum. They're calling for 700 to 800 Ethereum. Many of you guys will remember that if you were here a year ago. Essentially, everyone was calling Ethereum dead, and I said Ethereum's definitely not dead. And this video will explain to you exactly why that is the case and why we are headed to new all-time highs sooner than most think. Now, that was posted April 2nd. April 7th, we bottomed, and in the next like 2 or 3 months, I think, we went on to Impulse, again, strong momentum upside, rally, to new all-time highs. Okay, so Ethereum officially broke all-time highs a few months after sharing this video about why Ethereum was definitely not dead and why everyone should be paying attention. Today, we're at almost the exact same spot. You'll notice that we haven't breached this low, and that's important. We'll get to that in a minute. But we're making technically a higher low. We're at almost the exact same spot, and once again, Ethereum is dead. Forgetting that not even a year ago, Ethereum made new all-time highs. At a point where people were saying it was dead down here, and it made new all-time highs in like 3 months. Now, once again, the sentiment is once again that Ethereum is dead. Same price, same sentiment. And once again, extremely, extremely bullish on Ethereum. You can go watch that video if you want, but I'll talk about why I'm bullish here again. We already talked about Ethereum Bitcoin pairing being back at the buy zone. And the second part of the equation is that we know that Ethereum Bitcoin printed an impulse off the lows, which I showed you guys. And we can also see a potential impulse here on the Ethereum USD pairing. It's a little bit tricky to identify. This fifth wave here was like, this was insanely clean. You have 5-wave subdivisions, not only here. If you zoom in even more, you can see the 5-wave subdivisions here of the fifth subwave. You can see the 5-wave subdivisions here of the third subwave. Nice little expanded flat 4. And again, expanded flat is essentially just a range, puts in a high, puts in a low, takes the highs, takes the lows, and expands. That's what we call an expanded flat. In other words, it's a range with a deviation of the highs, a deviation of the lows, and an expansion. That was our subwave 4. And so this is our major subwave 4. So you can look at this as our major subwave 1, and then this looks like the 2, this looks like the 3, this looks like the 4, this looks like the 5. And so I'm going to go ahead and change this. And then this third wave, you have the 1, 2, 3, choppy 4, and then the 5, and then you have this deep wave 4. Again, the wave 4 is deep, but it doesn't go low below the origin of the impulse, or it doesn't go below into wave 1 territory, so it's valid. And then you have the very aggressive wave 5, right? So you have an impulse here on Ethereum as well, and that's why this is the high time frame invalidation level, because we know that in a trending market, we expect the lows of the impulse, or the origin of the impulse, to be defended. One parallel you can make to this structure here, we have a very deep retracement, and a lot of times that makes people throw in the towel at the wrong moment because they think that it's over. But one comparison you can make with Ethereum here is kind of how Bitcoin was during this retracement here, right? And again, historically, those who have been here since the last 6 years, it's crazy to say that, but if you're here 6 years ago, you'll remember when I was very bullish on Bitcoin here at 3K, and I talked about the reversal that we saw here, and I said new all-time highs within a couple of months or something, and then we accelerated to new all-time highs. We held the lows, we made a higher low despite the deep retracement, and we went on to make new all-time highs above 20K for the first time. This is a parallel, right? In this case, Bitcoin pumped from 3.2K to 13.8K, retraced all the way down to 3.8K on Coinbase, 3.4, 3.5K on other exchanges down around here, didn't breach the lows, and then continued on impulsively. Similar thing here where we're very close to the lows, but we haven't breached them. The lows are being defended, and as long as it's defended, then this expansion is technically a higher low, and we expect the third wave to continue. So again, zooming out once more, just how we had the 5-wave move on the Ethereum Bitcoin pairing, we also are looking for a 5-wave move on the Ethereum USD pairing, with this being a deep wave 2, a third, a fourth, and a fifth, okay? And again, the first subwave here of this 5-wave move took us from $1,300 to $5,000. The third wave typically is bigger than that. And again, in crypto, we tend to have a fifth wave that actually extends even more than the third. So the fifth wave is typically bigger than the third. So not only is the third wave typically bigger than the first, but the fourth wave, meaning the deeper retracement that we get that follows that, shouldn't enter wave 1 territory, meaning it shouldn't pull back deep enough to hit these levels at 4K, which means that the third wave should actually expand pretty significantly above 5K.
The thing about this too is like, at this point, like, okay, even if you are speculating about this massive move, like, this is like a who knows? A lot of speculation, we'll say that. The second thing is like, okay, let's just say you are anticipating this to happen. And how are you going to trade around that? Just buy a spot bag at this point and just hope it swings to this complete other side, I suppose.
Is a nice round number. Seems reasonable. We tend to find resistance at these big round numbers, so I can see our third wave ending at about 10K, maybe pushing up a bit higher to 11, 12.
It's just like one of many scenarios.
And then pulling back to settle under 10K, and then maybe we get the wave 4 retracement, which is going to be the deeper correction that shouldn't go back down to 4K, so we'd expect that to find a floor somewhere above 5K-ish, and then we get our fifth wave, which is going to be technically the parabolic move, or the move that takes us above, realistically, I think 20K, right? Take all this into consideration, and if I take this off log scale, you'll see it's probably going to look something a little bit more like this. Very deep wave 2, so actually this third wave, it might take a little bit longer, in which case a little higher. Something like this would not be unreasonable, and this would be essentially almost vertical price action. And again, the third wave should be greater than 5K, and realistically significantly more than that. We often get extended third waves, which means more than 1.6 times this. 1.6 times 4,000 is $6,400 move. That's the bare minimum we'd expect, because we're expecting this to extend. If you take where we are now at 1,500 plus 6,400, that gives us third wave minimum of around $8,000. Again, that lines up closely with our expected target around $10,000. Then you get the wave 4 pullback. Then the fifth typically extends. And again, extends meaning we call this a double extension. It happens a lot in crypto, right? Because crypto momentum is strong and we get these parabolic blow off tops all the time. If our third wave takes us up to 10K, that is around an $8,000, $9,000 move. And then if we look at 1.6 times that, so let's take 1.6 times 9,000, that gives us 14,000. That says that our fifth wave should be at least $14,000. Again, we know that that's the minimum we'd expect with a double extension, so we could expect even more than that. Let's say this fourth wave retraces down to 7K, because we know it shouldn't go back below 5K. So let's say it goes down to 7K. 7K plus 14.4K, the minimum 1.6 multiple of the third wave. What is that?
Oh, man.
$20,000. And so that is how we get our second factor that tells us that 20,000 is not just possible, but probable, just based on what we know about momentum in bull markets in a strong upward impulsive trend. That also gives us a target of 20K plus. 10K being, again, absolute minimum. Because remember, guys, again, just like we have a massive range on the Ethereum Bitcoin pairing, we also have a massive accumulation range on the USD pairing. This is the exact same structure that we basically have on the Bitcoin pairing, except it's against USD. And so if this is a giant range that we've been accumulating with the deviation below, again, this is our triple tap, low, lower low, higher low, baseline of the range. Once again, we see the triple tap making an appearance here. And again, not only that, we have a triple tap, we have an impulse at the end of it. If we hold the higher low here, it keeps the entire structure intact if this higher low is held. And we already have the first impulse. So this 5-way move stays intact above 1385-ish. And we have a completed triple tap base. So everything lines up here. Triple tap accumulation, first impulse of 5, it's all lining up. And if we're going to get now expansion out of this, if we're finally ready for expansion out of what is essentially a 5-year range, then $5,000, the new highs, is not the target. That's the bare minimum. And so expansion then, based on our expectation of a strong uptrend with a series of higher highs and higher lows, 10K is a minimum, guys. It's very logical to say that, okay? So this is our second factor. First factor, Ethereum Bitcoin pairing, which I explained to you guys in a lot of depth. Second factor, Ethereum USD pairing with our high time frame invalidation, our local impulse, our completed base formation. Let's look at the third factor. The third factor is looking at the ratios of where Ethereum Bitcoin is versus the price of Bitcoin. So going back to this chart now, and let's take a look at some numbers here, okay? Bitcoin currently trades at about 60K, give or take. And I'll have to cover this in another video, but I do think Bitcoin is forming a bottom here, okay? And I said that in my last video, which was around 4 months ago. I said the same thing, that Bitcoin's probably bottoming somewhere between this massive consolidation structure. And again, this consolidation structure goes down as low as 49K. That's the whole range that was formed here. And when I talk about consolidation structure, guys, all I'm talking about is some sort of a consolidation, like you can call it a range if you want. This is an area where a lot of buying occurred, a lot of buying and selling. We traded here for almost a year, and there's a lot of either accumulation or distribution going on. Price erupted to the upside to confirm this was accumulation, not distribution, which we already believed at the time because we were missing our fifth wave. A lot of people thought this was distribution at the highs. We broke the all-time highs. This is distribution. We're headed back down for a new bear market. We said, no, we have a fifth wave coming. And so this area is where a lot of buyers loaded up. This was fair value for Bitcoin for whatever reason. It very quickly doubled up. So when we revisit this area, we expect that if this was fair value then, there's a good chance it's fair value now. This is where a lot of buyers very clearly saw Bitcoin as a worthwhile buy. So we expect this area to act as support. And you can see this type of concept replicated again on every time frame. We call these demand zones. This is just a very high time frame one basically. But essentially I said we're back at this high time frame demand zone. This is where I do think we're probably forming some sort of a bottom. Again, it can take multiple shapes and forms, but some sort of a bottom being formed here. And I still believe that. And again, our last YouTube video was around 4 months ago, July. So maybe March or February, right around here. So we're pretty much at the same price when I made my last YouTube video. And back then I said I believe Bitcoin's forming a bottom here, and I maintain that, right? A marginal lower low below this low, but nothing significant. And I believe that we won't get anything too significant because I do believe that we're just finding support in this cluster of demand and we're going to form a bottom here. More on that in the next YouTube video because I want to focus on Ethereum here. But the point is that if Ethereum USD is going to hold,
not guaranteed.
It kind of goes without saying that Bitcoin should not have another major dump. Bitcoin has a major dump. Ethereum is probably going to get pulled down enough to hit this level, right? We already came down around 1500.
I think people are getting really bullish right now, right? It's just me, people getting real bullish right now off this bounce. Like the sentiment has been quite bullish lately. I don't know. I do not know this is the low. People forget how quickly we can fucking nuke down, right? People really forget this shit. And then right now we're still getting bullied on just Beartives printing on like downward sloping moving averages. We're like 2 liquidity grabs away from just like ding. And at that point we're like nuking through the golden pocket. And this move right now is kind of starting to look kind of weak, right? It was like a nice bounce to start, but now we're like kind of doing one of these. So, yeah. I don't know if the low is in on the higher time frame.
I also think Ethereum is forming a bottom because everything that I've talked about here in this chart, and they're both lining up, right? If one's forming a bottom, the other one probably is too. So the fact that they both look like they're bottoming to me makes logical sense that there's a decent chance this is a bottom for me. Obviously, if Bitcoin nukes, Ethereum's probably going to drop below this perceived bottom as well. But again, if you believe that this is a high time frame accumulation structure, which I think is not just very likely, but it's clearly supported by lots of data, then it will only be temporary. But the best case scenario is we don't breach this low because that keeps this impulse intact, and that means that we're getting ready for a massive, massive run. But in any case, the point that I'm trying to make here is if we go back to Ethereum Bitcoin, we assume that Bitcoin is bottoming at 60K. If Bitcoin is bottoming at 60K, it's going to go back up here. Realistically, I think to new all-time highs, but let's say we're not going to make new all-time highs, and we chop between 60K and 80K for the next 2 or 3 years, just for argument's sake. What would Ethereum be trading at if this is the bottom on Ethereum, if this is the post-Bitcoin top alt season starting that we've talked about? And again, we'll talk about Bitcoin dominance in the next video too. This all goes hand in hand, but I really want to focus on Ethereum here because these videos, as you can see, get kind of lengthy, and I want to break it down in digestible pieces. But if Bitcoin is not going much lower than 60K, and Ethereum is finding a bottom here and it's going to rise, okay? Ethereum USD is going to rise, Ethereum Bitcoin is going to rise because we're going to start seeing outperformance for the first time in 5 years. Then
these indexes are rolling over right now.
All-time highs here. At the time, Bitcoin is trading at 70K, let's say. What is 70K times 0.158? That's $11,000, okay? So at the bare minimum, the time Ethereum Bitcoin gets to these levels, which is a range highs, which again is the minimum target for this sort of a bottom accumulation structure. By the time it gets here, and if Bitcoin is still chilling at like 70K, that still puts Ethereum at $11,000. Okay, let's say Bitcoin's trading at 80K. What would that put Ethereum at in that case? So 80,000 times 0.158, Ethereum would be at $12,600. Okay, now let's say for argument's sake, the Bitcoin top is not in, and that Bitcoin is headed to new all-time highs above $126,000. In that case, what does that put Ethereum at? If this is correct and Bitcoin has not put in its top and it's going to be going back above 126K, and I have very good arguments for that as well. We'll talk about that in the next video though. So just bear with me. I'm going to get a lot of people that are like, Bitcoin's dead. This is the bear market. We're not going back to new highs. It's over. Just like we did, when Bitcoin collapsed from 60K, despite the fact that we then went on from 15K to make a fifth wave impulse to 100K plus.
I don't think anyone's saying that, or at least anyone like.
So let's just say, for argument's sake, that the Bitcoin top at 126K is not in.
That's not trolling.
If Bitcoin is trading at 126K and Ethereum Bitcoin made new all-time highs, $126,000 times 0.158 is $19.9 thousand. That is a $20,000 Ethereum. If the top is not in, it's going to go back above 126K. And if we just get to the bare minimum target of these range highs, that gives us a $20,000 Ethereum price target. And so this is why I say that if Bitcoin is going to go for a big rally above 126K, let's say Bitcoin is really in that sort of super cycle scenario where this clear 5-wave impulse is really just the first wave of 5. You can call this an extended fifth of the fifth of the fifth. If Bitcoin's going to go far above 126K, like let's say Bitcoin hits 200K, for example, just for argument's sake, that would then put Ethereum Bitcoin at 200K times 0.158. It's going to get kind of nutty here, but let's just for argument's sake. That would put Ethereum at $30,000, okay? There's a lot of possibilities here. Maybe the Bitcoin top is in. Even if the Bitcoin top is in, Bitcoin is probably forming a bottom at 60K. So maybe it's going to range or chop around between 70 and 80K. In this area where Bitcoin's top is in, and this is the post-Bitcoin top alt season that I've been talking about now for many, many years. Finally freaking time for that. Even in that scenario, we have conservative targets, right? When Bitcoin's trading at 80K and we hit these levels, that is still 13,000 Ethereum, right? And again, we're expecting expansion above these levels. So even in a scenario where Bitcoin has topped, maybe Ethereum Bitcoin goes to like 0.2. 80,000 times 0.2, now we're at $16,000 Ethereum. And that is only 25% rise above the old high. What if we go up 50% above the old high? Now we're at 0.25. So 0.25 times 80,000, $20,000 Ethereum. So there's a pathway to 20K ETH, even if Bitcoin is already topped and will not see above 126K and just chops between 60 and 80K for the next 3 years. There's a path to 20K, an even easier path, I should say, if Bitcoin has not topped and Bitcoin sees above 126K. In that case, at the bare minimum, take 130K times 0.158 puts us at 20K Ethereum. And that's the bare minimum if Ethereum has a top. 130K, just a slightly higher high is the bare minimum. And even then, Ethereum would be just at its bare minimum target on the Bitcoin pairing would be at 20K Ethereum. So 20K Ethereum almost seems like, again, I don't want to say it's a given, but insanely realistic. I'll add that if it does seem crazy to you, the thing that you have to keep in mind, and you can see this from the Ethereum Bitcoin pairing actually, remember that Ethereum Bitcoin has essentially been in a consolidation range since 2017. I want to kind of really emphasize the implications of this. If this is correct, right, which I obviously believe it is, but maybe you don't, okay? But if it is correct, and this is the truth, that Ethereum saw an expansion phase up until 2017, and then found a top against Bitcoin, while Bitcoin corrected and brought the entire market down. We know that Bitcoin always rises first in bull markets. It leads the way. And we know that we get all seasons following distribution at Bitcoin's highs. Why? Because there's profit taking in that money. All that money that comes out of Bitcoin at the highs typically finds its way into other altcoins and other assets. And there are people that have argued that that's not going to happen because of ETFs and because institutions aren't interested in other altcoins. But you can just look at the ETF space right now, guys. We don't just have Bitcoin ETFs, we have Ethereum ETFs, we have Litecoin ETFs, we have XRP ETFs. There's not an exclusive CRV ETF. There's a DeFi index by Bitwise and by Grayscale that has 10 different DeFi assets, including Uni, including Hype, including CRV, all in a basket that you can get exposure to. So now you have an ETF for all those assets. You have ETFs for like HBAR now. There's an ETF for HBAR. There's an ETF for Dogecoin. There's an ETF for so many coins now. To say that institutions aren't interested in altcoins is silly because now we have proof that they are. We already knew this. That argument to me never made any sense. But this is a testament to that. Okay. So again, the implication is that Ethereum hasn't been in a quote unquote serious bull run since 2017 because everything that followed, we know that 2017 was.
Here's what the flows are like in those. And Kenzie have been monitoring them. And imagine they're particularly high.
That started in 2018 and that we know is potentially wrapping up now finally in 2025, 2026. So for the last 7 years of this massive secular bull run on Bitcoin, this was akin to Bitcoin running from its $200 level to 20K in 2017. This obviously happened a lot faster. It took only 2 or 3 years. But remember, alts didn't have their biggest runs until Bitcoin had topped here. And then we saw the biggest alt season we've ever seen, right? And you can look at Bitcoin dominance charts to validate that. But my point is that once Bitcoin has its secular bull run and tops, then we see the massive influx in alts. Until Bitcoin has its secular bull run and tops, you shouldn't expect that. And that's why I've been bullish on Bitcoin dominance this entire time. And I said back when Bitcoin dominance was at like 30% that we should expect Bitcoin dominance to rise to 50 to 60% along with our 5-wave impulse, right? Our 5-wave secular cycle. And only after that 5 waves is over will we see a breakdown in dominance, which we'll touch on in the next video. But this was Bitcoin's time to shine. And finally, after 7 years, we're finally starting to see, in my opinion, a shift, and we're finally going to start seeing Ethereum get its time to shine because Ethereum is now at the point where Bitcoin is potentially topped or very close to completing its 5-wave cycle. Even if we're going to get an extended cycle here, that ultimately just means that the Ethereum Bitcoin pairing may rally but then bleed more if Bitcoin starts going parabolic. But again, any way you look at it, whether the Bitcoin top is already in or whether it's not, either way.
I don't know if this chart is correct. Well, I'm looking at this like total HBAR spot ETF history data volume. There's like literally nothing. Most days it's literally 0. And some days it's like 100K volume. What's the market cap of this thing over here? 3 billion. And this thing is seeing 100K of volume. Yeah. Not too sure about that one, but okay.
You look at it, Ethereum is poised to make some major moves here. Again, I want to emphasize that the point here that I'm trying to make is that if the last quote-unquote bull run for Ethereum ended in 2017, and ever since then it's been consolidating against Bitcoin, and this impulse, this little baby impulse here, is marking the start of our next expansion phase, the same way we saw impulsive price action here. And again, I can go ahead and label this. This isn't the origin of Ethereum. I think Ethereum was created a little bit earlier than this. If I just look at this as like the first expansion phase, the first 5-wave move, and then this was a major massive correction, this is another 5-wave move. This will be the first impulsive / expansive phase in Ethereum since 2017. Everything that happened between 2017 and now was not technically an Ethereum bull market. It was technically one massive consolidation phase for Ethereum. That's crazy to say because 2017 was back here, guys. It wasn't this peak. It was actually this peak. What that implies, and this is where it kind of gets kind of crazy, I'm going to go ahead and over and like side by side Ethereum, Bitcoin, and Ethereum USD. Let me kind of re-emphasize what this implies, okay? So if we look at the Ethereum Bitcoin chart, this was Ethereum's expansion phase. Ever since the end of 2017, Ethereum has been in a consolidation phase against Bitcoin. Here, I think this is the start of the next expansion phase that takes us to the range highs, but up until now, this was consolidation, right? So all the price action from the end of this general area here in 2017, but you can take this as the range too, this low and then this high. So all the consolidation that happened from here, the early 2018, late 2017, has been not really a true expansion phase for Ethereum, okay? And that is 2018 January. This is, the blue lines are going to line up right here. Everything that you see then on the USD pairing, which is literally a move to $5,000, which is pretty significant still, right? This all happened in what was essentially an Ethereum consolidation phase. I don't want to say it's like not a bull run because that's a massive move, but I mean, this is a joke compared to what we're about to see on Ethereum. You can view this as like one giant corrective phase. This entire structure, this got dragged up because Bitcoin was doing so well over the last 5 years, okay? But this was not Ethereum's like outperformance because at the end of the day, it didn't outperform Bitcoin for the last 5 years. It was essentially dragged up by a very, very, very bullish Bitcoin. Keep in mind, guys, back here at this level, Bitcoin had never seen above 20K back here in 2018. Bitcoin went on a monster run. And Ethereum, essentially, if you look at it from the ranging perspective, kind of sort of maintained par with Bitcoin over this general amount of time. Obviously, now it's quite down a lot lower, but you can see we had periods where Ethereum would rally and outperform against Bitcoin, which is this move here. But in general, it stayed within this range, right? Which means this entire move, despite it being a very big move, we went from $80, guys, to $5,000. The old high was around $1,000. So this is still only a 4 to 5x above the old high, but this was all just like essentially consolidation phase. And obviously, we have our range up here that is an even tighter consolidation phase. And many people view this as an impulsive move on Ethereum. And I get why, because it was a very strong move. It's hard to view it as anything else, but that was at the end of the day just dragged up by a bullish Bitcoin. And we know that because Ethereum did not outperform. It literally made lower highs against Bitcoin this entire time. So this was a function of Bitcoin breaking 20K and then going on a 6x run to 100K plus and getting tons of attention. Ethereum benefited from that against USD, but it hasn't yet actually had its own bull run or bull cycle of its own since 2017. And so what we are now approaching, guys, is a point where when you look at this from the Ethereum Bitcoin pairing structure-wise, bottom formation, the Ethereum USD pairing structurally a bottom formation, both the Ethereum USD pairing and the Ethereum Bitcoin pairing printing a triple tap base plus initial first impulse, both now retracing deep, very close to that invalidation level for a deep wave 2. If these levels hold, we look for a third wave of expansion, which would break the range highs. For the first time in Ethereum history, for the first time since 2018, Ethereum may be about to go on its very own quote-unquote bull cycle for the first time in 7 years. This is something that the class of 2021 has never experienced or never witnessed firsthand. This is something that the class of 2017 and 2018 has only witnessed one time, and so thus maybe thinks it was the only time it's ever going to happen and we're never going to see it again. But from a pure, data perspective and a pure charting perspective, the stuff that we've seen that works time and time again, what it's telling me is that for the first time in 7 years, Ethereum is gearing up for a massive, massive run. Guys, the way that you can view this is that Bitcoin had a massive run that ended in 2018 at 20K. Following that,
Imagine Tom Lee would be laughing. It's gotta be
from
laughing.
3K to 100K that took place from 2018 to 2026. That run for Ethereum is about to start now. That run for Ethereum, that massive run, the same one that took Bitcoin up 33x off of its lows, that is about to start for Ethereum now. Every and any way that you look at it, that is what we're seeing. And that is why I am so insanely bullish on Ethereum right now. And that is why Ethereum is most definitely not dead, guys. And that is why I think 20K is not just possible, but it's very probable. And after going over all this data and looking at every scenario, Bitcoin top being in, Bitcoin top not being in, it just makes sense to me that 20K is very likely. And depending on how high we go above this range, potentially even higher than that. And so I want to add, guys, that a lot of you guys who focus on narratives rather than charts, there is a narrative that is forming here that I think is worth thinking about as well. And that narrative is around Bitcoin's current situation with Michael Saylor and MicroStrategy. For those who have been paying attention to what's been going on in the last few weeks in the crypto space, there has been a lot of talk about MicroStrategy and his dividend paying instrument called STRC. To kind of sum it up, guys, to give you guys a gist of what's going on if you're not aware, Michael Saylor has been accumulating Bitcoin through MicroStrategy now for some years, and he has now gotten close to accumulating almost 5% of all the Bitcoin in existence. And up until this point, he had been preaching that he would never sell Bitcoin. He would never need to sell Bitcoin. And if you actually looked at the filings for MicroStrategy in the risk assessments, there's always been verbiage there that said that in certain scenarios they may have to sell their Bitcoin to meet obligations to investors, right? So that language is always there, but a lot of people seem to ignore it. And Michael Saylor himself had come out on video and said a couple times that you don't sell Bitcoin, you just buy Bitcoin. A few of us were saying that for some time as well, that I think that the next secular bear market will end with Michael Saylor getting liquidated. That's a story for another day, but a few of us were saying that no, he would actually have to sell Bitcoin at some point based on his structure. Fast forward and he launches STRC, which is a dividend paying instrument connected to the whole MicroStrategy situation. What happened recently was because of the price of Bitcoin being at 60K falling as low as it did, MicroStrategy's average cost of Bitcoin now is above 70K. And he has this instrument called STRC that pays dividends every month or something like that. The story was that he now had only enough cash on reserve to continue paying out those dividends dividends for another 6 months or so. Okay, so the price of STRC was supposed to be at around $100. It started bleeding lower. Why? Because people were worried about him being able to meet his dividend obligations because he only had enough cash on hand for a 6-month runway. I'm actually going to go to the chart so you guys can see exactly what I'm talking about. You can see trading at around 100 for a long time, and what happened recently, it tanked all the way down to 70. Why? Because there was panic that
Yeah,
he's not
right
gonna
now?
make payments on these dividends, and the whole point of this instrument is to pay out consistent dividends. It's like 11% or something like that. Anyways, the point was that he did not necessarily have enough money to meet those obligations for longer than 6 months, and the only way to do that, or there's I guess a few different ways for him to raise money, but one of the ways would be to sell some of his Bitcoin. Randomly out of the blue, we find out that he sold 25 Bitcoin. Okay, 25 Bitcoin is almost negligible. It's not a big amount of Bitcoin. It's very little, but he sold.
Sold
some
a lot more
Bitcoin.
today.
There's no ideas about why he did this.
Or
I think
announced
some were
it.
saying trying to
I don't
test
know
market
when they
reaction.
actually
I know there's
sold
a link to
it.
that. Something to do with the credit ratings for the instrument for MicroStrategy, and if the investment is not considered liquid, then it can't get approved for a higher rating. So he had to sell some Bitcoin to prove that it is a liquid investment vehicle, and therefore that would allow him to get added to certain indexes, whatever the reason may be. 25 Bitcoin was sold. Not a big deal, but the market seems to have been rattled by it a bit. Following that, they had to figure out a way to solve this issue of the bleeding price of STRC. STRC was bleeding because people were getting less confident in him being able to meet these obligations and being forced to sell Bitcoin. And so they recently came out with an announcement saying that they are finding ways to shore up their reserves. Okay, and I made this post that talked about it. This was on June 29th. Okay, the announcement was made by Saylor talking about how they've padded their cash reserves and they've allowed for up to $1.25 billion worth of Bitcoin to be sold if needed to maintain these cash reserves. Okay, specifically for the payment of these dividends and debt interest. So this then alleviated the immediate concern of not having enough runway to fulfill the dividends for more than 5 to 6 months. Now they had 15 plus months worth of cash balances to fulfill these obligations, and up to 25 plus months if they were to sell $1.25 billion worth of Bitcoin to add more cash to their balance sheet, essentially. And so that would then give them the runway of 25 plus months to pay out these dividends. That then alleviated concerns about them not being able to meet those obligations, and then the price of STRC pumped back to what it is at today, which is at 87. But the point is that it is now, for the first time in Bitcoin's history, been made clear that Saylor, who now owns nearly 1 million Bitcoin, will resort to selling Bitcoin if needed. And this is a big change from his prior positioning, which was that don't sell Bitcoin, just buy it. That he wouldn't need to sell any Bitcoin, that MicroStrategy would continue to accumulate Bitcoin like till the end of time, essentially, and that they would never need to reverse course and dump these Bitcoin. That whole idea has now been shattered with these recent developments. And if you guys want to understand that whole situation better, there's this thread, the thread that I quote tweeted on this tweet by mass.money. They have a really good thread about that entire whole situation. And you can read, if you really want to better understand the situation, you can go to their page. You can read this thread here, okay? It basically breaks down very clearly what's going on with STRC, what that whole situation that I just explained to you is all about. It breaks it down step by step. Very good thread that I recommend you read if you want to better understand exactly what I just talked about with STRC and why he had to sell Bitcoin and why he has now approved the sale of $1.25 billion of Bitcoin if needed. And as well, guys, Mass is one of my partners. I've been partnered with them for a couple of years now. Great product. If you guys want to support me, you can sign up to Mass with the link in the video description.
What is
or
that?
on my X page, the link in my bio. It's a great tool to allow you to trade perps on the
Oh.
decentralized exchange. You can swap between 8 different chains. You can on-ramp and off-ramp fiat, et cetera, et cetera. The point is that now that narrative that he's never going to have to sell has been essentially destroyed, the reality is that people now realize that Michael Saylor could be forced to sell more Bitcoin. Okay, he said before that he wouldn't need to. If Bitcoin price were to continue to bleed
True.
lower and lower and lower, it could put more pressure on him, resulting in
Smelling
having to dump more
blood
Bitcoin.
in
And
the
this is gonna be
water.
a bit of a negative headwind for Bitcoin moving forward, I think. This idea, this narrative that, you know, Michael Saylor might need to sell more Bitcoin, or if price doesn't continue to rise, he may need to dump. That is a risk that is now very evident and very clear to anyone who's in these markets. And I think that narrative also kind of supports the argument that we may now see Ethereum start to outperform. Bitcoin has had a massive run since 2018. It has potentially completed, I should say, a full 5-wave bull cycle that lasted around 7 years. Historically, alts begin their outperformance after Bitcoin has topped. We have all these arguments from a technical perspective, as I've just shared, as to why Ethereum is ready to run. Add on to that the fact that people are probably spooked a bit by Michael Saylor and his recent actions. They now know that 5% of the Bitcoin supply could come back onto the market if he gets liquidated, if price continues to bleed lower. And the risk has not generally increased, I would say, to hold Bitcoin, okay? There's other factors that I'll talk about in the next YouTube video about Bitcoin specifically as to why I still think that we're going to...
I think people are overplaying that a little bit. I think the price have to stay super depressed for a super long time.
A monster Ethereum rally for the first time in 7 years, what we can call maybe the first secular bull cycle in Ethereum after the run in 2017. But now we also have a narrative that supports that idea as well. And so everything that I'm seeing, guys, is coming together to suggest that we may be getting ready for a monster run on Ethereum. If you are new to the space, and if you haven't been here for the last few years, or even if you've been here since 2020, if you haven't been here since 2017, then the way that Ethereum is about to perform, in my opinion, is going to blow away anything you've ever seen. It's going to blow away your wildest expectations, because everything that you've seen Ethereum do up until now has been nothing relative to what's coming, in my opinion. The entire move on Ethereum from $80 to $5,000, when taken in context of the Ethereum Bitcoin pairing and that sideways consolidation, has been nothing. This move was massive. It was nothing compared to what's coming. Just looking at this structure alone of 5-year consolidation, as we always say, the longer the consolidation, the greater the expansion. That rings true here as well. So even if you ignore all this,
If that move happens, that would be quite the run, right? Like you'd be at that point, you'd be like pretty comparable to some of these like some of the AI moves we had this year. This was a 20K from here. It's like what, over a 10x at this point? It's like something that's exactly 1.7. That would be quite the move.
Ignore the fact that the Ethereum Bitcoin chart has been ranging not since 21, but since 2017. If you ignore all that and you just look at this 5-year consolidation, you should expect a massive expansion just based on this alone. But where you pair in the fact that not only was this a consolidation period, but this entire structure since 2017 has been one massive consolidation period on the Ethereum Bitcoin pairing, That's not a 5-year consolidation. That is a 8 to 9 year consolidation that we're going to break out of. Guys, everything that happened within this range on the Ethereum Bitcoin pairing is going to look like peanuts compared to what Ethereum's about to do. And I have absolute, very, very high conviction in this. So guys, that is going to be it for this video update. I think I've painted a very clear picture of what my expectations are for Ethereum here. I think 10K is a bare minimum. I think 20K is realistic. We're probably headed higher than that. And I've shared to you guys why I think that's going to be the case, whether or not the Bitcoin cycle top is in. And guys, to be clear, Ethereum is not going to be the only alt that runs. Super bullish on XRP as well. And these are historically kind of like the market leaders, the OGs, XRP, Bitcoin, Ethereum, some of the original cryptos that were created before 2020, 2021 that still exist today, that still maintain a very high market cap level. And both XRP and Ethereum look absolutely primed to run. So essentially what I'm trying to tell you guys is that Ethereum and XRP are probably going to lead this alt season. And this is going to be the start of the biggest alt season that you've ever seen. It's going to be bigger than the 2017 alt season because now we're not working with whatever the market cap on the space was here. We're working with 2 to 3 times that. And it's going to probably take a little bit longer to play out than it did in 2017, just as this Bitcoin bull cycle took, 7 years to play out. From 3K, it took us 7 to 8 years to get our full 5 waves. In the same way, this next phase of this altcoin expansion, this altcoin alt cycle, is probably going to take longer than the last one. And it's going to get kicked off, in my opinion, with Ethereum and XRP leading the charge. And when that happens, guys, all the little altcoins that we've been talking about are going to follow. Not all, obviously, right? There's a lot of stuff that's going to be left behind. But the stuff that actually has intrinsic value, that is built long time frame accumulation basis like Ethereum has, like XRP did before it went on its 7x run from 50 cents to 350 and also in all-time highs, those altcoins, guys, you guys who follow me are very familiar with which one I'm talking about. They're going to finally go ballistic and reach those targets, in my opinion, that I've been talking about for years now. I've always said that do not expect altcoin targets to be met, my end of cycle targets, until the end of the Bitcoin cycle, somewhere once Bitcoin breaks above 100K and has topped. And I've been saying the exact same thing since 2021. The biggest altcoin cycle that we've ever seen in our lifetimes will happen after Bitcoin tops somewhere above 100K and not before. Bitcoin has built 100K, has potentially topped, and we're
Gonna close that. We'll kind of wrap this up, boy. I'm tired. My ass is tired. I was just looking up what the ETF inflows are, looking for some of the alts that have them, so out of curiosity. Like I know like Solana hype and like XRP to some extent have been getting some, but I don't know about the others. Yeah. Yeah, I mean, let's turn in terms of wrapping this up. Did the juice box earlier? How long ago would it have been? Can we? Probably like an hour ago at this point. So if anyone's here to come in to see the juice box, I'm gonna have to rewind a bit. But like a kind of just a summary in general, I suppose. Just like kind of just watching this volume node, right? More or less. Kind of seeing what's going on with this thangity thang. Other than that, everything else we kind of covered previously still applies. And in terms of tomorrow, probably same as today. Probably same as today. Maybe I stream during the day and not at night. But we'll see. We'll see. Either way, I'm out of here. That's the only thing we gotta do. No chat shout out, right? No chat shout out needed. Going to bed though. I'm tired. So later.